In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture
because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Paramount or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030. 11
of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics.
The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Another down day on Wall Street, third in a row for the S&P 500 index ever since closing at a record on September 2nd. Today, the S&P down 11, right to the numbers. We'll give you the why in just a moment. Right now, we do have the S&P 500 index lower by 0.3%. Dow Industrials down 110, drop there also of 0.3%. NASDAQ slumping 103, down now by 0.7%. The NASDAQ 100 index down now by 0.5%. Bottom line here, we're on track for a 2-week low. Investors are reassessing valuations in light of global economic risks, including the spread of the COVID-19 Delta variant, along with reductions in central bank stimulus. Kristen Bitterly is head of capital markets in the Americas at Citi Private Bank.
We've not had one pullback of 5% or more in 2021. This has only happened twice since 1980. And while we've had a couple of pullbacks of about 3%, they've been bought very, very quickly. And so I think this has a lot of investors wondering, okay, will we actually see realized volatility rise? And will that put us into what is actually a pretty normal equity market of a couple pullbacks of 5% or more, and even up to one of 10%?
And again, right now we're looking at a 0.2% drop in the S&P, down 10 to 45.09. 10-year yield again 1.33%. Spot gold down 0.1% right now. An ounce of the precious metal 17.92. West Texas Intermediate crude up 1.3%, 69.24 a barrel. Deal news: Citizens Financial buying JMP Group for $149 million in cash. JMP, based out in San Francisco, gaining the capital markets firm's investment banking, strategic advisory, and other businesses. Right now, we've got shares of Citizens down 0.9%, JMP up by 2%. Recapping, S&P down 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers Studio in New York. Good afternoon to our audience on Bloomberg Radio and on YouTube. It's Bloomberg Business Week on this Wednesday, September 8th, 2021. I'm Tim Stenovic. Carol Masser is off today, and joining me is Bloomberg News cross-asset reporter, also my co-host of Quick Take Stock, Katie Greifeld. Katie, good afternoon. Growth concerns, though, pushing equities toward a two-week low.
Yeah, it's interesting. And you see that echoed in the beige book headlines that we are getting now from the Federal Reserve. And it seems to be the mood music on Wall Street as well, seeing Morgan City and Citigroup downgrade U.S. equities basically on those fears, the Delta variant, what it will do to growth.
Yeah, as you mentioned, the Fed citing the Delta variant as a reason for deceleration. We're going to get the latest from the CEO of Atlantic Health System on the virus. Crypto also under pressure today, and we're going to feature later an interview in just a few minutes. That's with U.S. Secretary of Labor Marty Walsh. We're also on the ground in San Jose as opening arguments begin at the trial of Theranos founder Elizabeth Holmes. And we've got three CEOs joining us this afternoon from FanDuel, Heineken USA, and SecureWorks. A big show. All that and more over the next 3 hours. In the meantime, Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Let's get to the Market Drivers Report. And joining us live in the Bloomberg Interactive Broker Studio is Dave Wilson, stocks editor for Bloomberg News. Also joining us, Carl Riccadonna, chief industry economist at Bloomberg Intelligence. He joins us on the phone from New Jersey. Carl, I want to start with you as these beige book headlines continue to cross the terminal. To reiterate some of these, the economic growth downshifted slightly, according to the Fed, to a moderate pace. The Fed citing the Delta variant as a reason for deceleration, and the Fed saying that businesses in most districts remain optimistic. There is, though, the continued concern about supply disruptions. What are you reading into with these headlines as they cross in the last few seconds?
Well, good afternoon, Tim. I think what we're seeing here is further corroboration that the latest jobs report, last Friday's jobs report, which was strikingly weak, was not a particular anomaly here. This is consistent with what we're seeing in the broader economy. Deceleration related to the Delta variant, but nonetheless, growth is downshifting. And I think we have to look a little bit deeper beyond just Delta variant headlines, because we can see, yes, the high-touch sectors like hotels and restaurants, tourism, airfare, those types of categories are definitely showing a response to the Delta variant. But also, as we look further beneath the surface, the industries and the sectors that have been less vulnerable to the ups and downs of lockdowns and whatnot are also showing a little bit of frailty in terms of momentum. So this is not recessionary by any stretch of the imagination, but it is clearly telling us that growth is moderating in the back half of the year. And it raises some pretty significant questions about whether, as the economy is heading into a deceleration, how do you execute the Fed's tapering of asset purchases until you have a clear understanding of where the bottom actually is?
Well, Dave Wilson, come on in here, because I'm looking at a real-time chart of the S&P 500, and I see the ever so tiniest tick higher at 2 p.m. when these headlines cross. The slightest I'm talking about. Take us into the trade and the reaction from equity traders that you're seeing.
There's just not a whole lot going on. All you have to do to see what the Fed is talking about as far as supply disruptions go is look at what some companies are saying. You got the paint maker, Sherwin-Williams, coming out and reducing their sales forecast for this quarter because they can't get enough raw materials. You got PulteGroup cutting back on its projected closings this quarter for homes because they can't get enough materials to be able to build all the houses they want. And, so Sherwin-Williams off a bit more than 2%, Pulte down almost 5%, biggest drop in the S&P 500 at the moment. So, what we're seeing out of the Fed is certainly consistent with not only what the central bank has sort of laid out in terms of, where the economy is, but more to the point what companies are saying about their own prospects here.
Well, to stick with the Fed, Carl, you brought up the notion of the Fed taper. And I mean, after that Friday jobs report that we got, it feels like everyone is saying that the September taper announcement off the table. I'm curious, though, looking at some of the data points we have before the Fed meeting later this month. We have PPI this week, CPI next week. Is there anything that could move the needle for the Fed ahead of that meeting later this month?
Well, Katie, that's a very interesting question that you're posing. And really, I think the notion of the September taper announcement is a little bit of a straw man argument. Fed watchers who pay very close attention to what the chair has been saying we need a couple of meetings to make the assessment if that's appropriate, which kind of, paying attention to that language made it very clear that, the announcement will come at the November 3rd meeting, either for implementation in November or December. So it's really not taking September off the table, but rather whether that announcement comes in November to start this year or whether they maybe push it into the first quarter of next year, which I think could be the direction we're going, because it's not just Delta variant that's hitting the economic brakes here. Also, we have the termination of all of those supplemental unemployment insurance benefits, which will be kicking in September. We already saw retail sales taking a bit of a nosedive in the prior month, so things will likely only get worse as we get more spending data as those benefits run dry. In terms of what's going to influence the Fed here, right, we have to be cognizant it's a dual mandate. So in terms of inflation, they're seeing exactly what they need to see to have the confidence to taper asset purchases. The problem is in terms of job market performance, and they don't want to leave 5 million workers or would-be workers high and dry by pulling back too soon. So it would have to happen on the labor front, and I don't think we'll get any meaningful labor data ahead of that decision.
Yeah, we'll certainly be watching any data we do get closely ahead of that decision later this month. Carl Riccadonna, Chief Industry Economist at Bloomberg Intelligence. Dave Wilson, Stocks Editor at Bloomberg News. Dave will be back with us in about 90 minutes with the chart and stock of the day. It's time for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot, and it's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number is $4 billion. ByteDance is in discussions for about $4 billion in bank loans. That's according to a person familiar with the matter, as a crackdown on China's internet sector casts doubt over the timing of its much-anticipated initial public offering. The TikTok owner is taking advantage of low interest rates and will use the funds mostly to repay debt while replenishing its cash reserves for daily operations. Let's head now to Washington, D.C. for a check the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. President Biden is touting his human infrastructure bill to a union crowd at a White House event marking Labor Day. He says it's the everyday American who is the nation's unsung hero and deserves support.
America wasn't built by Wall Street. They're not all bad folks on Wall Street. I'm not suggesting that. But they didn't build America. It was built by the middle class. And unions built the middle class.
Biden is also calling for passage of the PRO Act, which would encourage the formation of unions and expand collective bargaining rights to more sectors of the economy. Coming up on 20 years since the September 11th attacks, most Americans agree the events of that day changed the country, but not necessarily for the better. Bloomberg's Nathan Hager reports.
Nearly half of respondents to a new Washington Post ABC News poll, 46% say the attacks on the World Trade Center and the Pentagon changed the country for the worse. Just 33% say the attacks changed America for the better. 1 year after the attacks, that number was 55%. The poll also finds a split on whether the U.S. is safer from terrorism since 9/11. 49% think it is. That's down from 64% around September 11th, 2011, the year Osama bin Laden was killed. In Washington, I'm Nathan Hager, Bloomberg Radio.
The U.S. Supreme Court is bringing back in-person oral arguments. The court says all arguments in October, November, and December will be heard in the courtroom. However, only certain individuals, including the justices and lawyers involved in the cases, will be allowed inside. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. Among the most read on the Bloomberg terminal this afternoon is the virus update that Bloomberg News does each and every day, and for good reason, as we did just hear from the Federal Reserve, the Fed citing the Delta variant as a reason for deceleration. Let's do an update on what we're seeing in terms of numbers as the Delta variant continues to make its way across the United States and indeed around the world. The global tracker cases are passing 222 million, deaths exceeding worldwide 4.59 million. According to the vaccine tracker, more than 5.56 billion doses have been administered. Do keep in mind that many of those shots require 2 doses, so fewer people than doses administered has to be taken into account. In the meantime, the World Health Organization, Katie, called for an extension on offering booster shots through year-end and said manufacturers and affluent countries aren't doing enough to achieve vaccine equity.
Yeah, and it was interesting to read that on the same day that COVAX, which is the global program that was set up to basically vaccinate the world, actually cut its supply forecast by about 25%. It now expects to have access to about 1.4 billion doses by year end versus about 1.9 billion previously. So, I mean, you have to imagine that that's just going to make vaccine equity worldwide even harder to achieve.
Yeah, it's been playing out like this since vaccines became available, at least here in the United States. There are many countries around the world that just don't have availability of vaccines. And this, as the United States and other developed countries are thinking or even administering booster shots. There's also a lot of confusion around who's getting what booster shot and when, at least here in the United States. We don't have official guidance. And like, if you got a J&J shot, are you going to get a Moderna booster? If you got a Moderna 2-dose, are you getting a Pfizer booster? We don't know the details around that yet.
Exactly. I mean, it's important to remember that only the Pfizer-BioNTech vaccine has full FDA approval. So that's another factor to consider when we're talking about who can get what booster shot.
Also in Europe, Austria announcing a roadmap of restrictions for the unvaccinated. This as it seeks to curb the fastest pace of new infections since April. Switzerland will require certificates showing that the bear has been vaccinated. This is Bloomberg Business Week, and this is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Equities falling toward a two-week low as investors reassess valuations in light of global economic risks, including the spread of the COVID-19 Delta variant and reductions in central bank stimulus. Federal Reserve out with its latest Beige Book report. It says U.S. economic growth downshifted slightly to a moderate pace in early July through August. S&P down 8 now, a drop of 0.2%. NASDAQ is down 92, a drop of 0.6. Dow Industrials down 84, a drop of 0.2%. 10 years up 13.30 seconds, 10-year yield 1.32%. Spot gold down $1.50 the ounce at $17.92, down 0.1%. West Texas Intermediate crude up 1.4%, $69.32 a barrel. Recapping, S&P down 9, a drop of 0.2%. I'm Charlie Pellet. That is our Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, as Charlie mentioned, the Delta variant continuing to be front and center, especially as we think about the economic outlook for the remainder of the year. Katie, we certainly thought that we'd be in a different place just a few weeks ago, just a few months ago. In fact, I got to tell you, I mean, I think I've talked about this a little bit, but I was supposed to go to a wedding next week in Mexico, and concerns about the Delta variant caused, the wedding is still happening, but we decided that our risk tolerance is not high enough to actually fly to San Diego, get on a bus and cross the border with a bunch of people who may or may not be vaccinated, because that's how we're getting to this wedding. And we decided not to go.
Yeah, in a darkly kind of humorous way, it's interesting to see this wedding boom collide with this surge in new cases. The fact that everyone who was supposed to get married in 2020, early 2021, has now pushed off their wedding to around this time. It was supposed to be safe. It's not safe. I'm in the same boat as you, Tim. My cousin is getting married in October. I hope he's not listening. It's an indoor wedding. I don't know what I'm going to do.
Okay, I really hope your cousin's not listening.
Sorry, James.
No
You're
offense,
out there.
James. Well, one of the reasons we really like to check in with our next guest is because he has such a good pulse on what exactly is happening with the state of the virus, especially in the tri-state area. Brian Granulati is Chief Executive Officer of Atlantic Health System. He joins us now on the phone from Morristown, New Jersey. Atlantic Health System serves nearly 5 million people in 11 New Jersey counties, 7 hospitals, 17,000 team members, and nearly 900 COVID-19 patients were at Atlantic hospitals at the peak of the pandemic in April of 2020. Brian, great to have you back on the show. Give us an update on how many COVID patients you have right now in the Atlantic Health System.
Sure. Thanks, Tim. This morning, we had 72 patients who were hospitalized at our hospitals throughout New Jersey.
A lot lower than what we saw at the peak of the pandemic in April of 2020. Do you consider the Delta variant having peaked here yet?
You know, the Delta variant is the predominant variant in New Jersey, and it is the majority of the cases that we sequence and the state sequences. So I think it is the main variant, and it's going to be with us for a while.
Well, let's talk about that since, like you say, the Delta variant could be with us for a while. You're seeing more employers and businesses require masks again. I mean, how else can people guard against the Delta variant? Because, I mean, at least I've heard that it's much more contagious than just the coronavirus itself.
So the first thing that people can do is get vaccinated.
Right.
And I think if you look throughout this country and see where the situation is different than it is here at the hospitals in New Jersey. In other words, the hospitals are being overwhelmed. It's a direct result of unvaccinated people getting sick, and they get very sick. The second thing is to just, again, use those common sense principles that we used throughout the pandemic. It's, stay socially distanced if possible, particularly if you don't know the vaccine status of somebody, and wear your mask. I don't know about you guys, but whenever I go into a deli, whenever I go into a shopping center, I put a mask on because I just don't know.
Yeah, same with me. And anyone who listens to the show knows that I take these precautions very seriously. Hey, excuse me, Brian, I want to, you mentioned vaccinations and the need to get vaccinated. It's with 17,000 employees at Atlantic Health System, are you requiring vaccinations for your employees?
So starting at the beginning of July, we put in place what we call a choice program. And that choice is that you either get vaccinated or you get routinely tested once or twice a week. And to just give you some context for that, at the beginning of July, 71% of our team members had been vaccinated. They had at least one vaccination. Today, 86% of our team members are fully vaccinated, and the balance of them undergo routine testing. So what that does is it protects our patients, it protects other team members, but it also gives people a choice about how they want to achieve that. And I think you've seen that approach of giving people choice being adopted by many other organizations, including those here in the state of New Jersey.
And so, Brian, broadening it out from the Atlantic health system, you mentioned that the best protection against the Delta variant is getting vaccinated, but it feels like at least in the U.S., everyone who wants to be vaccinated at this point has had some form of access to a jab. So I'm curious, at a broad nationwide level, how do you convince the holdouts?
Well, I think you're starting to see that occur, because it's been my belief that this pandemic, depending on how close you've been to it, really influences how you think about it. So in other words, here in the greater New York area, I think all of us are traumatized by what occurred starting in December and running through April. And I know in other parts of the country, there was a very low incidence of the virus. And now we're seeing that those tables get turned. And so I'm encouraged by the vaccination statistics nationally, and we're starting to see them go up in a pretty significant way, particularly in those areas where people were not vaccinated, because now they can see the ravage of this virus and they can see it in their line of sight. And I think that makes a big difference. We're never going to change the minds of people who are dug in on this. But those fence sitters, I think, are getting off the fence and starting to get vaccinated, and I encourage them to continue to do that.
Yeah, a very good message to end on. It's not too late to get vaccinated. Brian Granulotti, Chief Executive Officer at Atlantic Health System, joining us from Morristown, New Jersey. Brian, thanks so much. It's always great to get your thoughts on the latest with the virus. Katie, it's absolutely mind-boggling that only 72 patients are in hospitals for Atlantic Health Systems right now, down from 900 just back in 2020. Let's go now to David Weston, who's standing by live with Marty Walsh, U.S. Secretary of Labor. Here he is.
Thank you so much for joining us. You're celebrating Labor Day a couple of days later than many of us did. You were at the White House today. Tell us about the event and why you did it.
Yeah, thank you. Happy Labor Day to everyone. Happy belated Labor Day to everyone. We had an event today with President Biden. Liz Schuler, the president of the AFL-CIO, and we had an essential worker there as well to talk really about what labor means and the importance of supporting labor. The president gave a speech today. On Labor Day himself, he went to New Jersey. He did tour a union hall down there, but it was line workers who were working in the recovery efforts from the hurricane. So a bit delayed, but also we announced today inside the Department of Labor, we have what's called the Hall of Honor, and we recognize people who made outstanding contributions to labor and labor issues. 9/11 first responders are on there, but this year we put up the essential worker, and we're also going to be working with states and people around the country to submit names so we can get some of the folks recognized who've done some amazing work this last 18 months.
Mr. Secretary, as you mentioned, it was a union hall that President Biden went to, and you had two representatives, prominent representatives of organized labor with you there today. Talk about specifically not just labor, but organized labor and this administration's deep commitment to organized labor. What can it do to really improve the situation of organized labor, particularly when it comes to the private sector? Because as we know, that's really trailed off in recent years.
Well, I think we have some piece of legislation like the PRO Act. Certainly the president's been pushing that. I've been pushing that as far as organizing. And I also think that, I think unions, if you look at the poll numbers, first time in quite some time, the poll numbers are very favorable towards unions. 68% of American people think there's a need and a willingness for unions. Millennials numbers are a lot higher than that, in the high 70 percentile. I think that we're at an intersection in our country right now, and I think there is a place at the table for organized labor to really make some gains here. but also while they're making gains, move our economy forward. This is not the labor movement of the past. This is an opportunity for labor movement to kind of recreate and really, get workers' rights, workers' issues out there in the forefront. So as we're thinking about moving forward, whether it's the American Jobs Plan, the Build Back Better agenda, or the family plan, what people are doing with the pandemic, really seeing the need for organized labor at this point.
So, Mr. Chair, put those two together for us, if you would. On the one hand, the desire to really increase the situation with organized labor. On the other, some of the proposals that are pending on Capitol Hill right now, whether it's the infrastructure, the bipartisan infrastructure bill, or the Build Back Better plan. The president has made it clear he'd like those to go to union jobs as much as possible. How does that work? Is it going to be in the legislation? They should be should be organized labor?
Yeah, there's some language in this. For example, in the infrastructure bill, there's Davis-Bacon prevailing wage provisions. That doesn't mean it's a 100% union project. It just means that it levels the playing field. But there's also, when you think about the future, it's about job training and workforce development. And organized labor, people can say what they want about organized labor, but the one area that they're far superb is in training, in job training and skills training, and doing all of that. And there's a lot of opportunity here with these two bills as far as job training and training the workers of the future, quite honestly, and the workers of today for the jobs that are in front of them. I think that, when you think about, the middle class, the decline, if you will, in the middle class, and you look at the decline in the labor movement, they run parallel to each other. And I think if we truly want to have a society where we build a middle class, a true middle class, where enough Americans can get into the middle class, we're going to have to see an increase in the labor movement. And the labor movement, as they know, in some cases, going to have to change the way that they operate, because it's not a 9-to-5 world anymore. And I think it's a perfect storm right now. I think there's a real opportunity and a real energy and a real willingness to really organize, but also organize the industries that might not be organized, but also understand that their business models are different.
Mr. Secretary, this week not only marked Labor Day, but also marked the end of some of that supplemental unemployment insurance for a lot of American workers across the country. Are you in favor of renewing that or extending it? Or on the other hand, do you think that might help the problem that we're having with labor participation, where we have a lot of job openings, but a lot of people not taking the jobs that are available?
Yeah, we'll see how much of a role it had in labor participation at some point soon here. The states that ended it early, there was about 22 of them. We didn't see any increase in hiring in those particular states or participation. But I do think that, as we get through the virus, now we obviously are dealing with the Delta variant. We want to make sure these benefits were limited. The Congress voted in the American Rescue Plan to limit them till September 6th. September 6th came and is gone. Myself and Secretary Yellen have allowed, I shouldn't say this. We're allowing states, if they choose to see fit, if they need to extend the benefits on a state-by-state basis, they can use rescue plan money, which is really an opportunity for them if they need to extend the unemployment benefit. States are in different places. I mean, if you watch your show all day long, you'll see certain states, the unemployment rate is very, very low, and some states are higher. They're still recovering from a pandemic in the very beginning days. So I don't think there's a need right now to extend those benefits unless a state sees fit.
And finally, Mr. Secretary, address the situation with women. I know that you're on your way tomorrow, I believe, to Philadelphia to make an announcement about what we're going to do to get women back in the workforce. Because as you and I both know, women were particularly hard hit by the pandemic. What can be done?
Yeah, first and foremost, we have to get women back into the workforce because it impacts our economy in a big way, number one. Number two, 4 million women at the beginning of the pandemic were basically lost their job. About 2.2 million of those women came back into the workforce. So we have about 1.8 million women right now that there's no sign that they potentially come back into the workforce. So we need to do a lot more. So first was investing in the CARES economy through the American Rescue Plan money, $39 billion for child care. We have to do more on child care in this country. And secondly, when school starts this week and last week, again, opportunities to get women in. And we also have to talk about job training. And quite honestly, we also have to equal pay. We've been talking about this for far too long in our country, about equal pay, looking at disparities between men's pay and women's pay. And now is an opportunity for us. That gap, there should not be a disparity between women's pay and men's pay in this country.
Mr. Secretary, thank you so much for joining us here on Bloomberg today. That's U.S. Labor Secretary Marty Walsh. And now back to you.
Thank you so much to David Weston and, of course, U.S. Secretary of Labor Marty Walsh live on Bloomberg. The Secretary saying that we have to do more when it comes to child care, also using the school starting date last week and this week as an opportunity to get more women into the workforce, also get those job training programs going. The Secretary also saying that he and the Labor Department are looking at disparities between pay when it comes to men and women, and he said that there shouldn't even be a disparity. Let's get a check of the latest when it comes to the trading day. Standing by is Charlie Pellet.
Hi, thank you very much. It is a down day on Wall Street with the Dow, the S&P, and NASDAQ. And as you mentioned, Labor Secretary Marty Walsh, former Boston mayor, by the way, just wrapping up a conversation here on Bloomberg Radio, talking about a number of issues, including growth of unions.
I think that we're at an intersection in our country right now, and I think there is a place at the table for organized labor to really make some gains here.
Federal Reserve out with its latest Beige Book report. The Fed says U.S. economic growth downshifted slightly to a moderate pace in early July through August. Cathay Pacific Airways says it decided to quote part company with a small number of air crew who chose not to receive available COVID-19 vaccines and did not provide proof of a medical exemption. In the U.S., lots of questions about the timetable for getting COVID shots to children under the age of 12. Dr. Bhakti Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
I think it's appropriate that we're looking for more data and taking more time to comb through the data to understand, like, what is the incidence of myocarditis or other complications, and how is that likely to affect children long term prior to approving the vaccine. And that's what we want as parents, right? We want to minimize risk. And so there is a balance game here, and schools right now do have strategies that they have implemented to make school as safe as possible.
Dr. Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track on a regular basis, they're all lower now. Pfizer down 0.4%. ADRs of BioNTech, its German partner, down 1.7%. AstraZeneca down 2.1%. Moderna out of Cambridge, Massachusetts, down 2.4%. J&J Johnson & Johnson down 0.1%. S&P lower by 8, down 0.2. The Dow down 0.2%. NASDAQ down 0.6. 10-year yield right now 1.33%. Gold up 1.5%, $69.38 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, let's take a look at the price of Bitcoin. It's down $465 per coin and trading right now at $46,000 and some change. This comes after a wild day yesterday when Bitcoin plunged on Tuesday. It sank as much as 17% in a matter of minutes, reaching its lowest level in about a month. Joining us now for the latest when it comes to the cryptocurrency and the crypto space is Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. He joins us live from the Bloomberg Interactive Broker Studios. Mike, we got to talk about this volatility. Is there any connection with the volatility that we saw yesterday and the day that El Salvador adopted Bitcoin as a legitimate currency?
Yeah, well,
or legal currency, I should say, to use the right term.
Legal tender.
Legal tender.
Currency, whatever.
There it is.
Yeah.
You can buy stuff in El Salvador
There
with
you
Bitcoin.
Go. Well, that's the key thing. It's made official by El Salvador. Now, other countries, it's probably less official. North Korea, China, Cuba, Afghanistan, Lebanon, you name it. The key thing is it's just noise within the bigger picture trend. So you look at today, Ethereum is back up. Ethereum's at 3,500. Guess where it settled last month? 3,400. Not a big deal. And you look at Bitcoin, the average price this year is 44,500. That was basically yesterday's low. So right now it's around 46,000.
What if you got $30 worth of Bitcoin yesterday in El Salvador, as the government is doing, and now today it's worth 10% less? What does that tell you about the volatility of the new currency that they want you to be using?
HODL.
But I get that, but it's a very poor country, and people don't necessarily have the ability to hold on to currency to save.
So they can. It's still free money, but it's only one day. And anybody who's been exposed to this for a while, which El Salvador has, Bitcoin Beach in El Salvador has been around almost 2 years ago. This has been trickled up for a reason, because this is a whole story of surfers and people who really trying to help the system. Bitcoin people helping out people in need. So it's been around for a while. So it's just new technology. The key thing is people are very poor there, and and it's just kind of the nascent technology. The key thing is the bigger picture, Tim, to look at it is look at this maybe 6 months or a year from now, the bugs will be worked out, and other countries are going to start doing the same, or it fails. But Bitcoin sees this 1,000 times. It's survived 1,000 cuts. That's the mantra of Bitcoin and cryptos is, yes, give us a glitch, we will overcome it.
And so it definitely did overcome it yesterday. I mean, it's still down 1% today, not close to the losses that we saw yesterday, 17%. But I want to talk more about what we saw yesterday, because I love this stat from a Bloomberg News article that close to $4 billion worth of crypto liquidations occurred in 24 hours. And it feels like every time we see a big sort of flash crash like this, that there's just this liquidation cascade that you might not see with other asset classes. So why does this keep happening?
It's a trader's dream, cryptocurrencies. It really is. And you get a lot of leveraged people, and you can't see on radio, but I used to have hair. And that's because I was an ex-trader, and I used to do this stuff. So that's kind of the benefit of ex-trader. You can see sometimes when people are getting stopped out because they were over-leveraged and over-enthusiastic, and that was a classic case, like we saw back in May and June. It bottoms, people get stopped out around 30, poof, it pops right up to 50. But overall, the big picture is this is part of the difference between the long-term buy and hold. People are looking for every dip to buy, and there's a lot of people in the world doing that. Starting here now, we're just adding El Salvador, and the traders. And because it's so easy to trade. You have bots, you have in and out algorithms, and that to me is what happened. Hit the stops, and I look over at Ethereum, which has been the leader this year. Bitcoin simply catches up to Ethereum just 50% of the way. It's at $100,000. Ethereum's up 400% this year. Bitcoin's 60. It's kind of meh. It's just the big one in the space. But that's the way I look at it. Bitcoin is like the digital reserve asset in a world that's going that way. Clearly, analog gold's being pushed behind, and Ethereum's more representative of the platform for the whole space. But El Salvador needs to remember, it's part of that increasing adoption of cryptocurrencies. If you told me a year ago that El Salvador would be doing this, I'd say, yeah, that's a sign of prices going up. In the big picture.
And prices have gone up in the big picture.
Yeah, and that's the way I'd like to look at it. It's trying to separate ourselves from those day-to-day fluctuations and focus on the big picture. Increasing adoption, declining demand.
I do think, and Mike, we got to wrap it here, but I do think the challenge with a currency being that volatile is that how much you have in your pocket changes on a day-to-day basis, and that can be startling to some people. We unfortunately have to leave it there. Mike McGlone, Senior Commodities Strategist at Bloomberg Intelligence. He's live with us in the Bloomberg Interactive Broker Studio. I love talking crypto with you, Mike. Thanks so much. Let's get a check of the latest world and national news. Nancy Lyons is standing by in D.C. Hey there, Nance.
Hey, Tim. A crisis over raising the federal debt ceiling is looming. Treasury Secretary Janet Yellen is urging lawmakers to increase the federal debt limit, warning congressional leaders today that cash and extraordinary measures will probably run out sometime next month. House Speaker Nancy Pelosi says much of what's needed is to cover costs incurred under the previous administration.
The Trump administration, which amassed over $7 trillion in debt, and that's what this debt ceiling lift is paying for.
Pelosi says raising the debt limit does not involve new spending. Some Republicans are threatening to oppose it without spending cuts. Virginia has removed the nation's largest lasting symbol of the Confederacy. A bronze statue of Confederate General Robert E. Lee was removed from a pedestal today in Richmond after a year-long court fight. This city black resident views it as a victory.
We no longer have to drive up and down Monument Avenue and be reminded of what he stood for and white supremacy and Richmond being the capital of the Confederacy.
The 12-ton statue is being taken apart and moved to a secure location. Macy's is bringing back its Thanksgiving Day Parade after going virtual during the pandemic. This is the 95th year of the annual holiday celebration, and officials say in order to resume the in-person event, health and safety practices will be in place. The Supreme Court is going back to in-person arguments. The justices plan to return to their marble courtroom for arguments beginning in October. This is nearly 19 months after the in-person sessions were halted because of the pandemic. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld in the Bloomberg Interactive Brokers studio in New York. Katie, I said to Mike McGlone that I love talking Bitcoin with Mike. the truth is, I love talking Bitcoin with you and Mike, okay?
Oh my gosh.
And it's something that we get to do each and every day pretty much at noon Eastern time when we co-anchor Bloomberg Quick Take Stock. And a story caught our attention earlier today, and it's one that we talked about with the co-author of the story, Charlie Wells, who, along with Claire Ballantyne, wrote about Bitcoin and meme stock traders. They're getting tired of buying the dip.
I mean, and you can just see that tiredness in the price of Bitcoin because, I mean, Bitcoin still down 1% today, down 11% over the past 2 days. You got to think if we were having this conversation a month ago, 2 months ago, definitely 6 months ago, this dip would have been erased. People would have rushed in and said, we're buying Bitcoin at a discount. But it does seem like they're a little fatigued, at least by today's price action.
I think what's so interesting is that this article comes just a day after the president of El Salvador tweeted a version of those 3 words, buy the dip. And he indeed said that he did buy the dip after the price fell yesterday on the day that the country made it a legal tender.
Yeah, in his tweet, he said that El Salvador added 150 new coins, taking advantage of that dip. I mean, which is, I think we can appreciate how unusual it is to see the president of a nation tweeting something like that, tweeting about buying the dip. It feels very 2021.
Yeah, so Claire and Charlie spoke to a handful of retail investors. One they spoke to is Ashley Duncan, who said that she's sick of it. She's 29 years old. She's from Dallas and says she's a, quote, gambler at heart. She's made several $1,000s in the crypto space, but after seeing the price of Bitcoin, Ethereum, Doge, and other meme assets slump over the past few months, Duncan said she now vows to hodl for dear life. Remember, hodl is internet speak for holding an investment long term.
Yeah, and that's interesting. She's not saying that she's done with crypto, just that she's done day trading it. It's too exhausting to keep up with it. She'd rather just hold on tight.
All right, we're going to have much more on crypto throughout the show and during our simulcast with our colleagues from Bloomberg TV at 4 o'clock Wall Street time. This is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a down day with the Dow, the S&P, and NASDAQ all in retreat. NASDAQ 100 heading toward its biggest drop in 2 weeks. Losses in mega caps, including Apple and Facebook, contributing most to the decline. Apple down now by 1.3%. Facebook down 1.3% as well. The NASDAQ 100 index down 0.5%. Equities lower across the board, with the S&P down 8 right now, a drop of 0.2. NASDAQ is down 100, down 0.7%. Dow Industrials down 76, a drop of 0.2%. 10-year up 13.30 seconds. 10-year yield 1.32%. Spot gold down 0.1%, 17.91 the ounce. And West Texas Intermediate crude up 1.5%, 69.36 a barrel on WTI. Among the companies reporting after the closing bell today, GameStop up 0.7% right now. RH, the old Restoration Hardware, down by 0.2%. Again, recapping, stocks lower, S&P down 9, a drop now of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, the NFL season, it starts tomorrow night. Dallas at Tampa Bay. It's certainly a sign that summer is over and fall is here, but also a time for fantasy and, of course, sports betting. Joining us now for an update on the business and more is Amy Howe, President and Interim CEO of FanDuel. She joins us on the phone from Los Angeles. Amy, it's really great to have you on Bloomberg Business Week Radio. Give us an update on the business. How would you characterize sports betting activity on the platform right now?
Thanks, Tim. It's really great to be here. So listen, we are just coming off of our second earnings call where we had a phenomenal first half of the year. We delivered over $900 million in revenue. As we look at the forecast for the full year, we're projecting to be about $2 billion. So the regulatory tailwinds that we've seen in the sportsbook space specifically continue, and we're incredibly excited about NFL as we step into the regular season tomorrow night, as you just said.
And so, Amy, great to have you with us. So this is FanDuel's first year as an NFL league partner. What should that mean for actual FanDuel users as the season kicks off?
Yeah, we're really excited about this season in particular. You're right. It is the first year that we've been officially partnering with the NFL. And I think there's really a few cornerstones to that program. The first is we're really elevating our game. We partnered up with, we think, one of the best agencies out there with Weeden and Kennedy. We have a great national ad campaign called Every Moment. And, this is really about how do we amplify those moments for that NFL fan, right? From the great, generous pregame offers we have a $1,000 risk-free bet, to showcasing that live betting product during the broadcast. So that's going to air this week. We're really excited about that. But with the NFL partnership, we're also going to have an opportunity to integrate the highlights directly into our app, right? So we're going to make it much easier for that NFL fan to stay connected to those big betting moments. And then, we also realize that there's a casual fan out there who may be just getting introduced to the category, and you may be sitting in a state, right, where sports betting isn't yet legalized. So with the NFL, in conjunction with some of our other partners, we have some really terrific free-to-play games, right? We have a high-low game that's going to be presented by Phil Simms and Boomer Esiason. These are really easy to play. They're free in all 50 states, and any fan could win $1 million. So there's a lot to look forward to. I think this is going to be a really exciting season, and hopefully we'll keep the fans back in the stadiums throughout the duration of the season.
Amy, you joined FanDuel less than a year ago in February of 2021. Before that, you were at Live Nation, and you served as Global Chief Operating Officer of Ticketmaster. And I'm wondering what it's been like to join this company and become its interim CEO just in the last couple of months in the middle of a pandemic when so many members of your workforce are presumably working remotely.
Yeah, listen, it's interesting because it's kind of connecting both worlds for me, right? As I look at the return of live sports and live entertainment, I have a lot invested in that because I managed through the biggest shutdown of the live entertainment industry. But I would say this is a once-in-a-career opportunity, right, to be able to step into a sector that has the kind of momentum it has, But also to do that with the #1 leading global gaming operator is really exciting. So couldn't be happier with my decision, but I'm also I'm pulling for everybody in live sports and live entertainment.
And so, Amy, you mentioned that FanDuel's latest earnings report was particularly strong. So I want to talk about the competition for a little bit, because Dow Jones reported last month that ESPN is finally getting into sports betting. It signed multi-year deals with DraftKings and Caesars. How does FanDuel maintain its edge as sort of the competitive landscape heats up?
Yeah, listen, I think that, FanDuel has a big part of our advantage has been the scale that we have, right? If we close out at $2 billion in revenue, that puts us about 50% ahead of the field. And there's really two big differentiators that have gotten us there. One is, we have the most distinctive product out there. We've been the #1 downloaded sportsbook app for quite some time. And a big part of that is we have been first to market with some great innovations, right? Same game parlay we've had since 2019. We have more betting markets than many operators. So continuing to innovate and make sure that we give the consumers exactly what they need from a product perspective is really objective #1. And then from a marketing perspective, right, we have scale that many others don't. I think our partnership with the NFL, many of the leagues and many of the meeting partners has been a core part of our advantage. So we're going to keep at it. We came out of Q2 with a 45% share of the sportsbook market, and lots of great runway to capture as we look ahead with new states coming online.
Hey, Amy, about a year ago, if you were talking to us, we'd be asking you about the narrative that had emerged at the beginning of the pandemic that many people who were at home weren't necessarily able to bet on live sports. So what they were doing was they were betting on meme stocks, and they were betting on the stock market and using commission-free trading platforms to do so. I'm wondering how you could talk a little bit, or if you could talk a little bit about the way that activity has ebbed and flowed, especially as it is related to sports coming back online and people potentially going back to the office at least a few days a week. And if you're seeing any sort of connection there, share with us the data.
Sure. So the first thing I would say is during the pandemic, we certainly learned that consumers love to bet. They view this as part of their entertainment experience. And so even though some of the professional sports were shut down, they found alternative things to bet on, right? We had Korean table tennis, believe it or not, was one of the most bet on activities during the pandemic. But they were, betting on politics and the Bachelorette. So we've created a platform that allows consumers to engage, and it's really part of the entertainment. To your question on what are we seeing as we return to normal, so far the data has been very compelling in that this is holding up, right? This online betting, not just in sports, but in casino gaming and racing and other activities is here to stay. So far so good. And I think a big part of that is we have created a platform that really enhances that live entertainment experience, right? So even if you're at the venue, it doesn't matter where you are. We're a mobile-first product, and so you can access that anywhere. So far, so good.
And Amy, we have just about 30 seconds, but Jefferies put out a note about your parent company, Flutter, and one of the positive catalysts they cited was a potential IPO for FanDuel. So I was wondering if you could talk us through any possibilities there about going public.
Yeah, the only thing I would say is, back in May, Flutter was very clear that the board continues to evaluate a whole range of strategic options. And what I'd say is here in the U.S., we're continue to stay focused on the objective, which is really being the #1 mobile gaming operator in North America. So.
All right, we're going to have to leave it there. Amy Howe, President and Interim CEO at FanDuel. She joins us on the phone from Los Angeles just one day ahead of the kickoff of the NFL season for 2021. This is Bloomberg Business Week, and this is Bloomberg Radio. In just a few minutes, we're going to head to San Jose for an update on the Elizabeth Holmes trial, which gets underway today. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a down day here. Final hour of trading on this Wednesday, September 8th. S&P lower by 7 right now, a drop of 0.2%. Equities are retreating as investors reassess valuations in light of global economic risks, including the spread of the COVID-19 Delta variant and reductions in central bank stimulus. The Dow down 66, down 0.2%. NASDAQ down 96, down 0.6%. The NASDAQ 100 index down by 0.5%. Federal Reserve out with its latest Beige Book report. It says U.S. economic growth downshifted slightly to a moderate pace in early July through August. Job openings rose to a fresh record in July, illustrating the lingering staffing shortages that are making it challenging for businesses to meet demand. That, according to the Labor Department's Job Opening and Labor Turnover Survey, also known as the JOLTS report. Gargi Chahurdi is head of iShares Investments at BlackRock Financial. She was interviewed this morning on Bloomberg Surveillance.
The job market is really strong. There's 10.9 million open jobs right now and about 8 million people that are unemployed. So the growth story is still positive, and I think even if the rate of change in the equity market slows down, I don't think there's quite so much room for concern yet.
Right now we've got the 10-year up 12.30 seconds, 10-year yield 1.33%. Spot gold down 0.2%, $17.91 the ounce, and West Texas Intermediate crude up 1.5%, $69.34 a barrel. Tesla shipments of China-made cars to the local market rebounded last month. Some bright news after a torrid run for the electric car pioneer in one of its key markets, and as overall auto sales in the nation slumped. Tesla shares trading lower today. Tesla down now by just about 0.5%. Again, recapping stocks higher, stocks lower. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. I'm Tim Stenovic. Carol Masser is out today. In her place is Katie Greifeld, Bloomberg News cross-asset reporter, also my co-host of Quick Take Stock, airing each and every day at noon Eastern Time on Bloomberg Quick Take. Well, the trial of Elizabeth Holmes, the former CEO of Theranos, who was once dubbed the world's youngest female self-made billionaire, kicks off today. She faces a dozen counts of fraud and conspiracy that could send her to prison for as long as 20 years if she's convicted. Joining us now from right outside the courthouse in San Jose, California, is Ed Ludlow, West Coast correspondent for Bloomberg News. Also joining us is June Grasso, a Bloomberg News legal analyst. She's the host of Bloomberg Law, airing weeknights at 10 p.m. Wall Street time on Bloomberg Radio. She joins us from the Access Line here in New York City. Ed, I want to start with you because you're on the ground there. As I mentioned, she faces a dozen counts of fraud and conspiracy, but what exactly are Holmes and Sunny Balwani charged with?
Yeah, so they're essentially charged with wire fraud, and how the prosecution are boiling it down is basically two schemes. One scheme to defraud investors out of their money, the other scheme to defraud consumers and doctors that went through the Theranos service to go through lab tests. And we've had the opening arguments from both sides. And what's interesting is the prosecution leaning very heavily on the idea that Holmes was knowledgeable of the issues with the technology and also the issues that was causing customers, that frankly she lied, and because the company got to a stage where it had run out of money, it was desperate, and so according to the prosecution, Holmes misled investors to keep the project alive. The defense have played the cards close to their chest, so to speak, but they've lent very heavily on the idea simply that Holmes believed fully, not just in what the company was trying to achieve, which was to bring down the cost of lab tests, but that it worked and that she was acting in good faith in that belief.
And so, June, I'm curious, are we actually going to hear from Elizabeth Holmes herself? Is she expected to take the stand?
That
that is the big question, and that's usually the question in every trial. Will a defendant take the stand? Because that is the biggest gamble and the most important question that the defense has to answer. Now, in this case, the defense has hinted that she may likely take the stand, but I noticed from what Ed said, they didn't mention it in their opening statement, so I think that they're playing along right now and seeing whether or not she will take the stand, because if she does take the stand, the prosecution is going to have so much ammunition to use against her, including a deposition she gave to the SEC after the collapse of Theranos, where some 600 times she said, "I don't know." So it's going to be very, very hard if she takes the stand. She's going to be faced with a lot of what she has said before. And of course, she has done countless media interviews, and there'll be a lot that they can cross-examine her with. So I think, but if she does put up the defense that we expect, but apparently it wasn't mentioned in the opening statement, we expect the defense to be that she was under the sway of Sunny Balwani, who was her lover at one point and the president of the Theranos, and that she suffered from mental and physical and sexual abuse, and that it was basically she was basically unable to form intent. But they didn't say that in the opening, so that's kind of leaves me guessing what's happening.
Yeah, it remains to be seen what the defense ultimately decides on for a strategy. Hey, Ed, since you're on the ground there, just give us an update on what it's actually like in this time of a pandemic. What's happening inside the courtroom? Are you able to go in? Are people who are not totally, actually involved in the case, like reporters, able to actually go in and see?
Yeah, that's a fascinating question. I actually was talking to the security guards here at San Jose District Court, and they were saying they've never seen anything like this, the sheer volume and media presence.
Wow.
There were people here at 4 a.m. local time, 5 hours before proceedings began, queuing in order to get in because of the COVID protocols, one in, one out. There is a courtroom which has a limited capacity, and then an overflow room with only 40 seats. And I can tell you there are dozens of reporters and members of the public still outside who are unable to get in. And one interesting point, maybe June has comment on this, but given the public interest in this case, there's no audio feed. There's no Zoom feed. So the only way to know is to be inside the room. Just very quickly on what June said, one of the points that the prosecution kind of dangled to the jury without going into detail is they do have text messages. They do have emails which they say demonstrate Elizabeth Holmes was fully aware of the defects with the technology. And in one instance, they cited some communication with Holmes's brother, who she'd hired into the company, and he had flagged issues with the technology. So that's just one of the points that June was talking to there.
Yeah, it'll be fascinating to watch. And I mean, I think we all read the book, Bad Blood. It was fantastic.
Yep.
So
Count me in that club.
Yeah, right. I would be in that courtroom if I could be. But June, I know that the trial hasn't even started yet, but let's talk about what kind of sentence Holmes could be facing. Maximum sentence of 20 years. Is there any read on how likely that will be?
That sounds like when they do the projections, they tell you what the most she could get is, and that sounds like it's pretty far out there. I mean, you have a woman who has never been in trouble with the law before. I'm sure she's going to have lots of people, writing letters on her behalf and saying that some of the good she's done in the community. So I doubt that it would be that much, but she's facing considerable time. And it also depends on how many of these charges. Is she going to be found guilty of all the charges, of the wire fraud, so it all depends, but 20 sounds like a lot more than would ever be given to her.
Hey, June, just in the last 20 seconds that we have with you, what's a realistic expectation for how long we can expect this trial to take?
They're saying 3 to 4 weeks, and trials often take longer than they say they will. They have a list of 180 witnesses, which of course is not what the prosecution is going to call, and the defense has a list of 50-some. So it's going to take a long time, but just how long, it's hard to sort of figure out at this point.
June Grasso, Bloomberg News legal analyst, also the host of Bloomberg Law. It airs weeknights at 10 p.m. Wall Street time on Bloomberg Radio. Also joining us live from San Jose, Ed Ludlow, West Coast correspondent for Bloomberg News. He's outside the courtroom in San Jose. I do expect it, just given what we see with trials, Katie, that 3 to 4 weeks, I would be really surprised if it actually got wrapped up by then. We'll, of course, have to wait and see, and we'll bring you updates throughout, of course. Let's now head to Washington, D.C. for a check of the latest world and national news with Nancy. Lyons. Hey, Nance.
Hey, Tim. The U.S. death toll from COVID-19 now tops 650,000. More than 40 million infections have been confirmed since the pandemic began. At the same time, 3 in 4 American adults have gotten at least 1 dose of the coronavirus vaccine. Dr. Stuart Ray with the Johns Hopkins School of Medicine says vaccinations will be making the difference.
The rate of hospitalization, the rate of death is double in the states with lower vaccination rates. So, what we can see is that high vaccination rates are associated with low complication rates. The states that are overwhelmed are the states with low vaccination rates. So we need high vaccination rates, high levels of immunity.
Tomorrow, President Biden will be announcing a 6-pronged plan to tackle the Delta variant. Dr. Ray at Johns Hopkins says that plan needs to include more rapid tests, respirators and masks, along with vaccines. Secretary of State Antony Blinken is in Germany, where he toured the Ramstein Air Base, where thousands of Afghan refugees are being processed. He made a point of thanking base personnel.
Because of what you've done and because of how you've done it, you have literally saved lives. You have literally changed lives. You've literally changed futures.
Blinken also met virtually with European allies to map out the strategy moving forward on the Taliban-led government of Afghanistan. Former President Trump is backing Wyoming attorney Harriet Hageman to unseat Congresswoman Liz Cheney, who voted for his impeachment. That's according to those familiar with the decision. Trump is apparently making good on his threat to exact revenge on those who voted to impeach him or blocked efforts to overturn the results of the election. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Katie, you're in New York City and in the surrounding tri-state area, and certainly, of course, in Louisiana and many parts of the South as well. We're still seeing the remnants of, among the most recent hurricanes, Hurricane Ida. And although we see the remnants here where we are, we certainly have to think about the way that it has hit other parts, not just of the economy, but of the country as well. Among the most read stories here on the Bloomberg this afternoon is about how Hurricane Ida has hit the U.S. energy markets unlike any other hurricane in U.S. history.
Yeah, it's fascinating. At this point, about 77% of the region's offshore production still remains shut. And it's amazing if you compare that to Hurricane Katrina, which was much more deadly. But at this point, after Katrina, about 60% of oil output had been restored and was still offline, and 40% of gas was still offline. So it's taking a lot longer to get the energy market in that region back up to speed, much longer than Katrina.
Yeah, just over 20% of U.S. Gulf of Mexico oil and natural gas production is back online after Hurricane Ida battered southeast Louisiana. That marked an even slower comeback, as you mentioned, Katie, than in the wake of Katrina. Many in the industry were expecting Gulf supplies to return faster than refining capacity, but now, at least according to Rebecca Babin, senior equities trader at CIBC Private Wealth Management, quote, "It seems like it may be the other way around."
Yeah, and it's important to note that it's a larger industry than it was 16 years ago. Now you see about 1.8 million barrels a day. That was before Ida, and that compares with about 1.5 million ahead of Katrina. So the industry itself is larger, and that's part of the reason why it's just taking longer to get back online.
Oh, there's a great chart in the story, a table that shows how long oil production had been out in recent decades. Hurricane Ivan knocked it out for 155 in 2005, 2004, and then Katrina was out for 138 days. This is Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a down Wednesday now with the Dow, the S&P, and NASDAQ all declining. Let's head right over to the First Word breaking news desk for today's afternoon call with the very latest. Here's Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the red right now, but are off session lows. Dow's currently down 47 points. S&P's dropped 5. NASDAQ is still lower by 91. The U.S. 10-year yield at 1.33%. Gold is down 2, and transports fall 64. Among the main 11 S&P sectors, utilities and consumer staples led. Energy was under pressure, and leaders to the upside in the Dow, Coke and Visa, while Dow Inc. and Nike led to the downside. In deal news, Spectrum Brands to sell its hardware and home segment division for $4.3 billion. In other news, Amazon is developing a new point-of-sale system, and GE said that short-term constraints may impact Q3 earnings. Wrapping things up, GameStop and RH report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plans are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
Well, banks and borrowers are rushing to add sustainability targets to loans, yet for many deals, the incentives are all but meaningless. It's today's Big Take, the very best of Bloomberg's in-depth original reporting from around the globe each and every day. Today's Big Take is co-authored by Michael Tobin and Davide Shiliuzzo. Davide joins us now here in the Bloomberg Interactive Brokers studios. He's corporate finance reporter for Bloomberg News. Davide, ESG, look, for lack of a better term, it's so hot right now.
Absolutely.
Talk to us about what you found in your in-depth reporting when it comes to the way that banks make loans to companies that have these ESG restrictions.
Sure. I mean, ESG is something that banks, companies, investment managers, everyone is looking at. What we decided to do for this story is to look at loans that are pretty regular way financing companies get from banks. So they're credit lines that they get for their liquidity purposes. They can remain untapped for a very long time, or like we've seen during COVID, they got tapped all at once. But they're very simple corporate finance 101 type instrument. And what's really exploded this year is the issuance of these sustainability linked loans. And basically what that means is that you take the credit line and you adjust the pricing based on some ESG metrics that the company sets for themselves. If they meet their goals, there is a small reduction in the interest rate. If they don't meet the goals, there is a small penalty. That's how it's supposed to work. And the idea is to link the cost of capital to environmental and social goals that the company may have.
And so it sounds like this was effectively a marketing ploy. Was it successful? I mean, were investors more likely to buy ESG loans?
So for now, this has really taken hold only in the bank market. So these are loans that the banks would give to companies, and the negotiation is basically between the company and its lenders. It's become a lot more popular. So we've seen already this year 7 times the amount of sustainability-linked loans signed compared to last year. But it's still early stages overall. There was 1.5 trillion of total loans done, and only 93 billion of that was sustainability linked. So it's still in early days, but definitely there is a lot of interest from the banks in participating, because they can also show in front of their stockholders or regulators that they're doing something on the ESG front, and they're kind of prompting companies to participate.
What's so interesting about this story is that to me, one of the takeaways I have is it's a story about incentives, because the incentives are supposed to be there for companies to have these ESG goals. But it sort of seems like the incentives aren't quite aligned between the companies that are being loaned the money and the banks, because the banks don't want to loan money for an interest rate that is too low because then they won't make as much money. Talk a little bit about the misaligned incentives here because they're just slightly misaligned.
Yeah, I think everyone is facing a dilemma here. So what we found in the story is that actually a quarter of the loans that we reviewed have no penalty whatsoever, and the incentive is only 1 basis point. So that's like $100 for every $1 million. It's like tiny, and these companies have hundreds of millions of dollars in revenue, if not billions of dollars in some cases. So the size of the incentive is incredibly small. And there are a few reasons why that is. One, the company may be reluctant to commit to very ambitious goals. They obviously want to maintain their cost of capital within a certain range, so they may not want to go out of the way and include massive adjustments. But at the other end of the bargain is a bank, and they make money by making loans. And these products, revolving credit lines and term loans, but specifically revolving credit lines, tend to be loss-making for banks to start with. And so any additional basis point that they give up as an incentive for the company to meet their goals is a basis point that they don't make in profits.
And so, Davide, where do we go from here? I mean, are U.S. regulators looking at this and these toothless targets and potentially getting upset, or are these banks and companies technically not doing anything wrong?
For now, the sense we got in our reporting is that regulators are really focused, both in Europe and in the US, on the investment management side. So if there is fund management companies that are marketing to their investors ESG funds or green products, and those claims are not substantiated, that's what regulators are looking at. In this case, it's mostly between the banks and the companies, and so no third-party investor really is involved.
Davide, just in the last 30 seconds that we have with you, what did you hear from banks when you reached out to them about this?
The view from banks generally is that they are trying to help their clients do the right thing. It's one tool in a bigger toolbox that companies have, and they're happy to do their part. Some recognize that this won't change the world, but they say it's a small step in the right direction, and it's worth pursuing.
All right. Well, the story continues, and it will certainly continue with Davide Shiliutso, corporate finance reporter at Bloomberg News. He's joining us live from the Bloomberg Interactive Brokers studio. The story all about ESG is today's big take. It's the very best of Bloomberg's original reporting from around the globe. Wall Street lends corporate America ESG credibility for 1 basis point. You can find it at the Bloomberg terminal and at Bloomberg.com. You can also check out more from the big take on Bloomberg and at Bloomberg.com. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers Studio in New York. Katie, you know what time it is?
I hear it involves Dave Wilson.
It involves Dave Wilson, and you know that because he's here live in the Bloomberg Interactive Brokers Studio.
I had a hint.
With us right now. This is the time of day where we embarrass ourselves and we can't get the song of the day. It's also, of course, time for Chart of the Day and Stock of the Day. We're going to get to that in just a few minutes. In the meantime, let's get a check on the trading day with Charlie Pellet.
Hi, thank you very much. And here's what's going on. We've got 29 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ right where they have been all day long, and that is lower. S&P down 7 now, drop of 0.2%, right to the numbers. We'll give you the why in a moment here. The Dow down 84, down 0.2%. NASDAQ down 99, drop there of 0.7%. 10-year yield right now 1.33%. Equities, though, retreating as investors reassess valuations in light of global economic risks, including the spread of the COVID-19 Delta variant and reductions in central bank stimulus. NASDAQ 100 on track for its biggest drop in 2 weeks. Losses in mega caps, including Apple and Facebook, contributing most to the decline. Apple, for example, down 1.2% right now. Facebook is tumbling by 1.3%. Again, the 10-year yield 1.33%. Spot gold down 0.3%, 17.89 the ounce, and West Texas Intermediate crude up 1.4%, 69.33 a barrel. Cathay Pacific Airways says it decided to, quote, part company with a small number of aircrew who chose not to get available COVID-19 vaccines and did not provide proof of a medical exemption. In the U.S., 3/4 of Americans have now received at least one dose of a COVID-19 vaccine, setting a new milestone in the country's fight against the pandemic. Welcome news for Dr. Bhakti Hansadi, Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
I really think it is going to get better. I'm quite an optimist when it comes to this virus right now. Vaccination rates have gone up. People have started adjusting the way they fundamentally live their lives, to wearing masks when they go to the grocery store, to minimizing gatherings. I think by January we're going to be in a very different place. And also, let's be honest, cases are falling across many different states. So there is cause for hope, and we should maintain that we will get back to our new reality.
Dr. Bhakti Hansadi with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer down 0.4%. Its German partner BioNTech down 2.4%. AstraZeneca down 2.1%. Moderna, it is down 3%. J&J, Johnson & Johnson down 0.2%. Football in the air, and NBC selling Super Bowl ads for as much as $6.5 million, a record that shows there's still advertiser demand for the most watched sporting event in the U.S., even with audiences shrinking. And that's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This I would say, the bar is pretty low in this room right now. And the fact that one of us got the artist, even though it was you two,
that's half.
It's pretty good.
Yeah. I'll take it.
Okay, thank you, Dave.
It's not nothing.
You're a tough man to impress, and I feel good.
Yeah. But I got to tell you, this chart, that we're talking about today, when you have a bit of following going on,
okay.
I mean, that seems pretty impressive, too. What we're talking about here is the relationship between the S&P 500, up more than 20% this year, and earnings estimates, specifically what you call forward earnings. So you're looking out 12 months. It's a comparison that Keith Lerner over at Truist Wealth made the other day in a report. And it really does kind of jump out as a way to, justify the strength that we've seen in U.S. stocks this year. And that's Lerner's take. Earnings have been the entire driver of market gains, he wrote. And here's how you can draw that. Like I said, 20% gain in the S&P 500. You look at what forward earnings have done this year. They're up 29%, at least they were through yesterday. So you've had even faster growth in terms of profit projection. And of course, remember, if you're buying a stock, you can't buy last year's or last quarter's earnings. So what's foreseen is what counts, what you may get down the line. So, you've got a chart that really does kind of point up that there is a what you might call a fundamental element to this year's gains in stocks.
So if you're watching us on YouTube, you see the chart shows projected S&P 500 earnings as a blue line. A white line is year-to-date change for the S&P 500 index. In April of this year, those two lines almost met. What does that signify?
It's just a matter of how much growth people are seeing. And you got to remember, you had just gotten through the first quarter earnings reports, or you started to get them in April. That may well be part of the mix too. But there's a lot of optimism around that's reflected in analyst forecasts. Bear in mind, this is based on individual companies. It's what's called a bottom-up approach, which is used in our data. So you kind of have to take that into account as well. Analysts kept seeing earnings, beating their projections more often and by wider margins than usual. So they got more optimistic, and it's reflected in the outlook.
And so, Dave, the S&P 500's price-earnings ratio actually lowered by 1.5 points. So, have stocks actually gotten cheaper, or am I getting ahead of myself?
No, that's what you can draw. It stands to reason. If earnings are growing faster than price, as represented in this case by the S&P 500, then indeed, PE ratios come down. That doesn't necessarily mean it's cheap by historical standards. When you're at 22 times earnings, I can remember back in the day it was 7 to 21 times that people looked at. When you got to the high end, it was expensive. That seems to have faded over time. Nonetheless, 22 is not exactly a bargain.
Dave, give us your stock of the day.
Okay, this is actually, what's funny. Somebody with Bloomberg Terminal asked me, well, why isn't ICU Medical your chart of the day? Well, the answer is because it's my stock of the day.
Okay.
And I picked that out earlier. This is a company that is a medical supplier, specifically infusion therapy equipment, things for IVs. They made a deal to buy the medical division of a UK company, Smiths Group. Okay, we're talking $2.35 billion in cash and stock. And people like that deal so much that ICU Medical, ticker, by the way, ICUI, rose as much as 37% in today's trading. At the moment, it's up 24%. So it looks like it headed for its biggest gain in about 25 years.
Amazing, Dave. That brings its year-to-date up to close to 20% for the year. So without that, it would be a different story. Look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave. Thanks to Stocks editor Dave Wilson. Let's get a check of the latest world and national news. Nancy Lyons is in D.C. Hey, Nance.
Hey, Tim. Saturday marks 20 years since the September 11th attacks. Commemorations are being held at the site of the New York attack, and police are planning to monitor the area a little more closely. New York Deputy Police Commissioner John Miller says while there is no specific or credible threat, there is a heightened threat environment, in part due to the fall of Afghanistan to the Taliban.
We've seen the call to action this year be louder and better organized from terrorist groups than we have seen in prior years.
Miller says the city is stepping up enforcement ahead of the anniversary. While Wall Street and many businesses wrestle with returning to the office, the Supreme Court is getting back to work in person. Bloomberg's Nathan Hager reports from Washington.
The Supreme Court says it will hold arguments in person when its next term begins in October. These will be the first courtroom arguments for Justice Amy Coney Barrett. They'll still include some precautions, though. Attendance will be limited to the justices, the lawyers, essential court personnel, and credentialed reporters. The Supreme Court's been holding arguments by phone since the pandemic began a year and a half ago. This next session will still include a live audio feed. In Washington, I'm Nathan Hager, Bloomberg Radio.
New Orleans has lifted a nightly curfew as the city moves closer to regaining full power. Entergy executives say they are on track to have power restored to 90% of city customers by late tonight. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Among the most read on the Bloomberg terminal this hour is a story about Bill Gates taking control, Katie, of the Four Seasons Hotel in a deal with Al Walid.
Yeah, it's interesting. So they will pay $2.2 billion in cash, and that will boost its already existing stake from about 47.5% to 71.25%.
So it's Bill Gates, and it's Bill Gates's Cascade Investment LLC. That's his family office, his investment firm, taking control of the Four Seasons hotel chain after his investment firm agreed to acquire a stake from Saudi Prince Al Walid bin Talal's Kingdom Holding Company. This in a bet that luxury travel will rebound from a pandemic-induced slump. The lodging industry has been hobbled by a drastic slowdown in global travel. This is the world's struggles to halt the spread of COVID-19. Vaccination campaigns help fuel a lodging rebound led by leisure travelers, but luxury hotels are still lagging behind lower quality properties. That's according to data from STR. We also makes me think, Katie, of the data that we got on Friday in the most recent jobs report that showed travel and hospitality adding no new jobs in the most recent month as a result of the spread of the Delta variant and the way that consumers change their behavior really quickly.
Yeah, that was definitely a standout from that report, that the hotel industry, I mean, it's a really difficult place to invest right now. You have to have a lot of conviction. Apparently, Bill Gates and his family office do that, this, maybe we are at peak Delta. We've been hearing reports of that around the country, that maybe the tides are turning. Definitely, we're seeing some investment there, obviously, from Bill Gates.
Well, Al Walid has holdings that include share of Citigroup, ride-hailing firm Lyft, also Accor SA, another hotel group. As for the Four Seasons hotel chain, it now manages 121 hotels and resorts, 46 different residential properties, and has more than 50 projects under development. That's according to the statement. Its landmark Kingdom Tower in Riyadh is among the 24 hotels it owns across the Middle East and Africa. This is Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks do remain lower. We've got the NASDAQ 100 on track for its biggest drop in 2 weeks. Losses in mega caps, including Apple and Facebook, contributing the most to the decline. Right now, Apple is down 1.1%. Facebook shares down 1.2%. NASDAQ 100 index down 0.5%. The NASDAQ Composite Index is down 99 points, down 0.6%. S&P 500 index down 7, a drop of 0.2%, and the Dow Jones Industrial Average down 87, a drop there of 0.3%. Equities lower as investors reassess valuations in light of global economic risks. 10-year up 11.30 seconds, 10-year yield 1.33%. Spot gold down 0.3%, down 5.40 the ounce at 17.88, and West Texas Intermediate crude up 1.5%, 69.34 a barrel. Again, recapping, S&P down 7, a drop there of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It's the drive to the close. We're just over 10 minutes away from market close on this Wednesday, September 8th, 2021, a shortened trading week. We see red across the screen. The Dow and the S&P 500 both down more than 0.2%. The Dow down close to 0.3%. The NASDAQ down more than 0.6%. Joining us now from Chicago is Sean Cruz, Senior Market Strategist at TD Ameritrade. He joins us on the phone from Chicago. Sean, it's great to have you back on the show. Hey, take us into today's trade and really what we're seeing, because if we do indeed, as the way things go right now, see the S&P 500 closing lower today, will be the third day in a row of declines on the S&P 500. We haven't seen a streak like that since July of this year.
Yeah, I think it's been interesting really just to see how markets behaved coming out of August when they were charging up to new all-time highs, and it really started to wonder where was there going to be maybe a little bit of a slowdown in that selling. But starting out the month, it looks like there has been a little bit of a rollover. And I think one major issue there is the concern about what is going to happen with monetary policy. When is tightening really going to occur? Even if that is just a pullback in asset purchases. The assumption is maybe not at September, but still probably by the end of the year. And then the other thing is really the Delta variant, and what does that mean if we aren't entirely out of the clear of the Delta variant, but you have a Federal Reserve that is still signaling that there is some tightening on the horizon here. And I think that is really why you're seeing some profit taking off of some of these all-time highs.
Well, Sean, let's stick with the Delta variant, because it was interesting. Today we got warnings from Goldman, Morgan Stanley, Citigroup, all warning that we could see some turbulence coming in U.S. equities. And the common denominator between those warnings seemed to be the Delta variant, along with decelerating growth. Where do you fall on that debate? Do you also see some turbulence ahead, or could we, after this bout of profit taking, could we continue to just grind higher from here like we have been?
Yeah, I would tend to agree with what they're seeing out of the economy, and I think it makes sense that you're going to have to come out and maybe downgrade your GDP forecast. If you think about the economic surprise indicator, I know Bloomberg has one, there's a few others out there. One thing is consistent, and that is going into August, they were sort of teetering on dipping into negative territory, but we have now seen them move solidly into negative territory, meaning the data coming out was significantly undershooting what economists were expecting. So I think it makes sense you are going to see them come out and revisit some of those forecasts, and maybe not put out an entirely doom and gloom forecast, but maybe just acknowledge that there are going to be some headwinds hitting the economy, and that is going to slow down the pace of this recovery.
Hey, Sean, I want to go to the two o'clock hour, right at 2 o'clock when we saw those Fed Beige Book headlines cross the wire, that the Delta variant as a reason for deceleration, that economic growth downshifted slightly at a moderate pace. Interestingly enough, we didn't really see the S&P 500 move lower on that news. Why do you think that is?
One, I think the market was already sort of expecting a lot of that news to come out, and I think what they're seeing out there is it's sort of this outlook there. They are acknowledging some of those issues, but they didn't really sound the alarm too much. And I think that
they did say that most businesses in most districts, they said that businesses in most districts remained optimistic, Sean.
Yeah, and I think that's the case where businesses are acknowledging, look, there is a little bit of slowdown. This is impeding some of the recovery. I mean, look at what we saw in the leisure and hospitality sector. That is sort of right there at the focal point of reopening, getting back to some sense of normalcy. Also going to be the first to feel any sort of reinstitution of restrictions by officials. So I think looking at the JOLTS data we got out today as well, it shows there's plenty of openings out there. And I think the assumption is as soon as we can start to lift some of those restrictions, you'll see that almost snap right back. And I think that's why markets are okay with acknowledging the Delta variant as a slowdown. But we have heard from quite a few health officials that we could get through this Delta variant spike here in the next couple of weeks. And if that is the case, then you will probably be able to return back to normal hopefully before too long.
And Sean, I want to talk about bonds because I was playing with some correlations this morning, and it looks like if there's a signal that the bond market is sending to equities, no one's picking up the phone. Because if you look at correlation between futures and the S&P 500 on a 90-day basis, and between yields and the NASDAQ 100, those tech stocks, correlations are basically meaningless right now. And I mean, if you go back to the start of the year or earlier in the year, it felt like tech stocks in particular were just following wherever yields went. So I'm curious why we're starting to see that dynamic breakdown and those two asset classes kind of go their separate ways.
Well, I think when you're looking at yields and any sort of relationship with equities, I'd like to look at and take a step back and look at the bigger picture. At the start of the year, you actually had yields trading in a pretty nice range between 100 and 120 basis points. You really saw things get dicey and markets start responding to what was going on in the market when we broke out of that and started charging higher. If you think about it, we closed and finished up February moving from about 120 basis points, and then probably about the end of March, we were up at 175 basis points. And then we've since dropped back down and hit a low of about 110 basis points once again in July. So what we've been seeing lately is sort of this range that we've seen bonds trade in the 10-year yields that I'm referring to, between 125 basis points and just under 140 basis points. So I think if you see us break out above 140, maybe go up and challenge 150 basis points, or even break lower, then you might see some sort of response out of equities. But I don't expect that to be a major driver or a major correlation on a day-to-day basis as long as we're staying within this range.
And so what is going to be the driver for the equity market from here then? I mean, are we just going to be trading off of, the U.S. COVID curve, or what's in the driver's seat now?
I think it's going to be some of those second-order effects from what happens with the COVID curve. I think as you start to get more of a broad-based reopening economy, which I said hopefully sooner rather than later, we're going to get a really good idea of how labor markets are going to really start to recover. We're going to get an idea of what sort of wage inflation we can expect, and an idea of when bottlenecks are going to start to clear up. So I think a lot of this is really centering around whatever those knock-on effects that lead to changes or movement in inflation expectations. I think that's going to be the next big item to look at, but there could be a few things that have to happen first, clearing up the effects of the Delta variant, getting an idea of what the labor market recovery is going to look like, and then from there we can start to get an idea of where some of these bottlenecks in the supply chain, where some of the wage inflation is going to fall. I think that'll give us a little bit more clarity on that, and markets will be more comfortable making a more pronounced, I think, possibly strong move in either direction once we have a better idea of what that is.
Sean Cruz, a senior market strategist at TD Ameritrade, joining us on the phone from Chicago. Sean, thanks so much for taking the time. We are just about 2.5 minutes away from the close of trading on this Wednesday, September 8th. The Dow still down by more than 0.2%. The S&P 500 down by a little more than 0.1%, but off of those session lows, the NASDAQ lower by more than 0.6%. As far as volume goes, we're seeing relatively a normal within range volume over the last 30 days. We do have 244 stocks in the S&P 500 lower, 244 higher, 261 lower. So kind of an equal break between higher and lower. Pretty broad-based sell-off that we're seeing today. Well, coming up next, it's Bloomberg Beyond the Bell. It's our cross-platform coverage of the market close. It's with our colleagues from Bloomberg Television. It's on YouTube, Bloomberg Radio, and Bloomberg TV. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Caroline Hyde, back in the saddle, counting you down to the closing bell. Here to help take us beyond the bell, it's our global simulcast team. Tim Stenovic in, Carol Masser out, the horse whisperer, Katie Greinfeld in her place. Together, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide. And Tim, it's an interesting day here. I mean, relatively subdued trading. Volume isn't light, but it's not necessarily the massive sell-off that maybe you would think there is with all the red on the screen.
Yeah, you know, it's so interesting that you say that because I think about the crucial moments of the day. I think of 2 o'clock when we saw the beige book summary from the Federal Reserve cross here. And interestingly enough, even though we got some headlines that weren't so great, that the Delta variant is a reason for the deceleration, economic growth downshifting slightly to a moderate pace. There's continued concern about supply disruptions. We didn't actually see the equity markets react in that much of a negative way, Katie.
Yeah, it was interesting because if you look cross-asset, for example, you saw bonds rally again. Yields had been drifting higher heading into today. You also saw the dollar catch a bit of a bid. Not so much on the equity front, though. I mean, on the sector level, utilities managed to rally, but big tech, for example, the haven of choice of late, it's falling.
Yeah, and some of the key stocks among them. I mean, how can the market rally when you have Apple off by, well, dragging the S&P 500 off by almost 3 points, when you've got Facebook down, PayPal down, Nvidia down? You can't really fight that.
You know what you can't fight is, I think, David Sowerby, the guest that, well, yes, thank you, Romaine. We can't fight the Fed. We also can't fight comments that we got from David Sowerby of Ancora Advisors, really saying that stocks continue to be some of the best inflationary hedges out there as we think about TINA and FOMO, Romaine.
Yeah, TINA and FOMO, you mentioned all those stocks that were down. Caroline, to the upside, you did get Amazon, the MasterCard, but that's not going to be enough here to push this market into the green. Dow Jones Industrial Average down about 72 points or 0.2%. S&P 500 down about 6 points or 0.1%, 45.14 and change right now as we wait for those numbers to settle. The NASDAQ Composite going to finish the day down roughly 88 points or 0.6%. The big underperformer of the day, once again here, though, of course, continues to be the Russell 2000. Take a look at the Russell here because it's going to finish the day down by about 1.2% here. A lot of this is it's pretty broad-based. You're talking about more than 1,400 stocks in this index are lower here on the day. It was the discretionary names. It was a lot of the tech names, and including a lot of those biotech names, really not doing much here to help that cyclical trade.
Yeah, not many winners on a day like today, especially when you see big tech taking a turn like this. One thing that I thought of today was, and I've been thinking a lot about today, is the JOLTS numbers that we got earlier in the day, really showing this imbalance, Taylor, between supply and demand when it comes to job openings and also people looking for work, because we do have millions of Americans on the sidelines who are not getting off those sidelines and going back to work, at least as of that August jobs report. At the same time, a record number of jobs that are open right now.
Yeah, that's really interesting, though, at least not affecting some of the corporations and some of the company stocks that we're seeing as of yet. And you really see that when we take a look, as we always do for our radio audience, at the sector winners and the sector losers. And of course, with some of the winners, this really does appear to be sort of a bond proxy, Katie, with bond yields falling. It's utilities, it's food and beverage, it's household products, it's food and retail and real estate, up 0.5% to almost 1.8% on the day. And on the bottom, unfortunately, sort of that reflationary trade and a cyclical trade that is a rotation out of that. It's semiconductors, materials, energies. Those are some of the worst performers on the day, off more than 1%, Katie.
Yeah, well, it was definitely a down day. I did find some gainers, though. One of them is General Mills. It reported at the Barclays Consumer Staples Conference, updated its forecasts. It now sees fiscal 2022 net sales, operating profit, and diluted EPS at the higher ends of its previous ranges. And a big reason why is due to its recent pet treats acquisition. People love their pets. Traders love the stock, up about 4.6%. Kraft Heinz, too, also gaining. It reaffirmed its full-year outlook, still expects to deliver 2021 EBITDA ahead of $6.1 billion. Also said that it's implementing necessary pricing actions to deal with cost inflation. That helped the stock finish about 3.9% higher today. And finally, Vinco Ventures, its latest meme stock darling. Traders have been all over the stock on platforms like StockTwits. Surged again today, closing about 5.8% higher. Reminder that the retail trader Tim is alive and well as we await GameStop earnings.
Well, 5% for one of the meme
General
stocks.
Mills up 4.5%. You don't see that every day.
No, you certainly don't.
Look at that camera work. Oh.
Also, GameStop is reporting earnings after the bell. Speaking of meme stocks, I'm keeping an eye on some decliners today. Coinbase Global, one of those down more than 3.2%. It's the U.S.'s biggest cryptocurrency exchange. It's lower after the company's CEO Brian Armstrong blasted the SEC for, quote, really sketchy behavior after the company received a warning that regulators plan to sue. This is in regard to the company's new lending product. It's called Lend, and that issue is whether or not DeFi lending pools qualify, guys, as securities. Pulte Group, also among the worst performers in the S&P 500 today, down more than 6%.
Can we just point out?
Yeah.
Like we keep calling it a lending product. They didn't actually roll out that product.
No, it's not rolled out yet.
And
And they
basically
said,
trying to block it before it even starts, which is relatively unusual for the SEC.
That's a really good point. And the company did say that it would delay the release of it until October, but it had announced it earlier this year to try to get support for it, and said that people have been expressing interest in it.
All right, I'm done interrupting.
That's okay. You can interrupt anytime you want, Romain.
Oh, great.
Pulte Group, among the worst performers in the S&P 500, finished the day down more than 6%. It's a supply chain story. The company cut its guidance for the year, said it would sell fewer homes than it previously led due to shortages of building products. Caroline, remember in July, it deliberately restricted home sales in the second quarter due to a shortage of workers and materials. Also keeping an eye on GameStop, down more than just 1/10 of 1%. It was I know it was a close one. It almost finished in the green, but I'm still calling that a decliner. We are awaiting those earnings. I did.
You've invited Romain in
I had a
to
backup
interrupt you at any given opportunity, and he will live up to that. Now, you're going to rue the day you said, come on in and interrupt at any given moment. Meanwhile, though, we move away from GameStop, which comes out with its earnings any moment now, to a story of red across your screen because it is a story of dollar strength today. Search for a haven bid. We saw the euro off by 0.2%, the Swiss franc by more than 0.25%. But even as we had dollar strength, let's go across the commodities market, which was a sea of green, not often what you see when the dollar is higher. But we've got, of course, supply chain issues. You mentioned when it comes to house builders, Tim. I'm looking at nat gas, of course, natural gas up 7%, worries about the repercussions of Ida. Interesting news, of course, coming from Europe in terms of Nord Stream, the pipeline there. But WTI crude pushing up 1.5%, still some areas offline in terms of the production of oil. We're seeing oil push higher. Still, aluminium up at a 13-year high. You've got the likes of natural gas at a 7-year high. Talk about inflationary pressures. Lastly, I look at the sovereign bond story from a global perspective. Completely mixed picture. What did it say in terms of the U.S.?
Well, it certainly said a similar story, Caroline, where bonds are catching a bid and yields sort of erase all the gains that they had made yesterday to now falling on the day. Yields are down at pretty much 4 basis points across the curve to a 134 and a 195 on 10s and 30s. And Tim, this really kicks us off. I think you made a good point earlier about the JOLTS data, maybe from the economic side, saying, well, we're seeing maybe some signs of slowing, and that folds into some of the equity strategists saying, okay, maybe we have gotten a little bit ahead of ourselves and we downgrade from an overweight.
All right, everyone, of course, waiting on those GameStop earnings here. They are crossing the wire right now. Net sales in the quarter here. This is their second quarter, coming in at about $1.18 billion. That's slightly above what the street was looking for, average of about $1.12 billion. Not really sure exactly what the adjusted loss is, but the street was looking for a loss on the quarter here. We'll have to dig a little bit deeper to get those numbers here. And of course, Tim, I think what a lot of people really want to know beyond the numbers here is really what Ryan Cohen's plan is for this company. And I think that disappointed the last quarter, where they didn't feel like they got enough clarity here about how he's going to take GameStop to whatever the next level is for this game.
Yeah, certainly listening for any detail from Ryan Cohen, but also Matt Furlong, who came most recently from Amazon. This is all part of the company's turnaround and whether or not it can actually deliver on that promise to actually transition itself from a bricks and mortar company into one that competes against Amazon in terms of e-commerce when it comes to gaming. This will be the first earnings call led by Matt Furlong and the duo of executives who came from Amazon. But we do have to remember GameStop's already up 920% so far this year, guys. And on average, since 2019, shares have moved lower by 18% the day after earnings. So I expect a little bit of volatility.
$15 billion market cap. They are missing when it comes to an adjusted loss per share, 76 cents. That's worse than the estimated loss per share of 67 cents. But if they beat in sales, I mean, it would be the second time that we'd see that since the beginning of 2019. So this is a company that always underperforms on earnings day, but it's not the only company coming out with earnings right now.
Nope, I hate to say it. Romaine keeps buying those Lululemon tights, and they are boosting the
They're
stock,
expensive,
Romaine.
but they're actually pretty comfortable.
They're pretty comfortable.
You know, if they weren't like $300,
A bit like
they would be a
Crocs.
little bit, you know.
Let's get you the numbers first, and then we'll hear about Romaine's tights. Second quarter revenue for Lululemon coming in at $1.5 billion, outperforming estimates of $1.3. USD, an improvement, huge improvement on the bottom line. Second quarter adjusted EPS of $1.65 versus $1.19. And frankly, all you need to know is you get an improvement in forward guidance on the third quarter and really hear the full year earnings and revenue, Katie.
Yeah, and you can see Lululemon just flying after hours. The stock is now up about 7% and climbing in after hours trading. So clearly traders like the stock and feel good about maybe Romaine buying more tights going
Well, I mean, these things are popular, Katie, as you know. And of course, they were popular, I guess, with women.
She's the marathon runner here, I
then they
think.
went after men and, you know, and I don't know. I mean, but they seem like they can do no wrong, Katie.
I agree with you.
You're a marathon runner too, right?
No, I'm no Taylor. I'm sticking to the 5Ks.
5Ks.
Yeah.
Look, I want to hear about any commentary around supply chain disruptions. That's certainly been a theme around earnings. I want to hear about e-commerce. I want to hear about store traffic. One thing that Lululemon has done really well over the last few years, the pandemic notwithstanding, is turning their stores into experiential centers, offering yoga classes. And that really gets people into the door because the challenge before the pandemic was, hey, what can we offer people in stores that we can't offer online? And how do we get people in here talking to the sales associates and actually doing yoga in the clothes, because that gets people to buy them.
Don't need to just do yoga in those clothes. I think there's a whole athleisure cult out there that largely don't do yoga, but
you
definitely
know what?
wear overpriced Lululemon.
I'm guilty as charged.
You are a cycler, my friend. I see you in your lycra every day, but doing real work on a bicycle.
You know, the thing about the Lululemon menswear is I can actually wear them on days like today, and you would have no idea. The pants look like work pants. I can get away with it.
All right. I always love when we keep things on track. So Lululemon beat here. GameStop, I guess relatively in line with estimates, so that loss per share did come in a little bit wider than expected. I have one little quibble here. I didn't get a chance to interrupt you before, Tim, when you brought it up here, but you talk about the shares being up 900 plus percent, 955% or whatever it is on a year-to-date basis. I always wonder why people sort of mention that, but they don't mention the fact that it was actually up at one point about 1,700%. So it's been a pretty big drawdown from that high.
A lot less shorted, though.
You know, I'm a pessimist, Tim.
That's good, and it's a good note to end on, even though I'm an optimist, Romaine. It's going to do it for our cross-platform coverage today. We'll be back tomorrow, same time, same place, on Bloomberg Radio, YouTube, and on Bloomberg TV.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so a slew of earnings crossing. GameStop, second quarter net sales coming in above expectations, Katie. This is what you call a beat. Revenue coming in at $1.18 billion. Estimates were $1.12 billion. I know you're keeping an eye on Lululemon as well. Some other numbers that we're getting to with GameStop. Second quarter net sales beating estimates. Adjusted loss per share, 76 cents. Estimates were of a loss of share at 67 cents a share.
Yeah, I have to say, out of all the earnings we just saw, definitely Lululemon is the bright spot. And that follows a very strong quarter that they reported in June. So not a lot of evidence that their growth was pulled forward during the pandemic. And I think that's probably why you're seeing the stock just, again, flying after hours, up about 8.4% right now.
And shares of GameStop lower fractionally right now, down by about 0.3%. Let's get a check of the latest world and national news. Nancy Lyons standing by in D.C. Hey there, Nance.
Hey, Tim, the Delta variant is filling hospitals, sickening alarming numbers of children, and driving coronavirus deaths in some places to the highest levels. The U.S. death toll now stands at more than 650,000, with one major model projecting it'll top 750,000 by December 1st. President Biden will be outlining a new COVID-19 strategy in a speech tomorrow. The head of the World Health Organization, Tedros Ghebreyesus, says he hopes that plan does not include booster shots.
For now, we do not want to see widespread use of boosters for healthy people who are fully vaccinated.
Ghebreyesus admits the third doses may be necessary for at-risk groups, but he says vaccine supplies need to be directed to low-income countries first. President Biden has been touting his human infrastructure bill to a union crowd today at a White House event marking a delayed Labor Day celebration. He says it's the everyday American who's the nation's unsung hero and deserves support.
America wasn't built by Wall Street. They're not all bad folks on Wall Street. I'm not suggesting that. But they didn't build America. It was built by the middle class. And unions built the middle class.
Biden is also calling for passage of the PRO Act, which would encourage the formation of unions and expand collective bargaining rights to more sectors of the economy. U.S. Secretary of State Antony Blinken says any legitimacy or international support for the Taliban will have to be earned after Afghanistan's new rulers announced an interim government that drew a deeply skeptical Western response. Blinken says the all-male government does not meet the test of inclusivity. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now back to you, Tim and Katie.
Thank you so much for that update, Nancy Lyons. Let's now check in with Charlie Pellet standing by for an update on the business trading day.
Thank you very much. Here's what's going on. We're keeping an eye on Lululemon, and it forecasts net revenue for the third quarter with that guidance beating the average analyst estimate. It also sees third quarter net revenue in the range of $1.40 billion to $1.43 billion. Estimates had been $1.32 billion. Lululemon shares up right now by more than 7%. Also closely watched after the bell, GameStop. It reported net sales for the second quarter that did beat the average analyst estimate. GME on the ticker, GameStop up right now by about 1.2%. Briefly, New York banning sales of gasoline-powered cars beginning in the year 2035. And California's natural gas prices hit the highest since the Texas crisis. Today, the Dow, the S&P, and NASDAQ all declined. We saw the S&P 500 index down 5 points, a drop of 0.1%. The Dow down 68 points, down 0.2. NASDAQ down 87, a drop today of 0.6%. The NASDAQ 100 index down 0.4%, biggest drop there in 2 weeks, with losses in Apple and Facebook among the biggest contributors to that decline. 10-year yield 1.33%, spot gold down 0.3%, 17.89 the ounce, and West Texas Intermediate crude up 1.5%, 69.37 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, here at Bloomberg Business Week, we talk a lot about and we report a lot about gender equity when it comes to representation at the top companies in the United States and at the top companies in the world. Well, the gender diversity in the alcoholic beverage industry has historically been not so good. It's been male-dominated. But one company is trying to shed a little light on that and changes that have been made in recent years. That company is Heineken USA, and we have Maggie Tymony joining us now, Chief Executive Officer of Heineken USA. She joins us on the phone from Connecticut. Maggie, Heineken USA has a new white paper out. It's called Behind the Label, Gender Diversity in the Alcoholic Beverage Industry. What prompted Heineken USA and what prompted you to do a deep dive into this?
Hi, Tim. How are you? Good afternoon. Greetings from Connecticut. Yes, we are, I'm a woman and I've been in the alcohol beverage industry for many, many years. And I looked around the room over the years and I don't see many diverse faces. So Heineken USA took a leadership position and got with a cohort of senior females across alcohol beverage. And we had a discussion and we said, it's really incumbent upon us to highlight the path and pave the way for the future generations of women. And I think, it's easy not to do anything to raise the profile of and highlighting the path for females in our future females in our industry. But we said it's incumbent upon us to take on that task and put it firmly on our shoulders.
And so how do you do that? Is that through recruitment or advancement for women already in the industry, or I imagine some combination?
I think it's a combination. The two things. When consumers when they think about Heineken USA, they think about the brand, and the same with other AltBev companies. So I think we need to ensure that we market the people behind the beverages and the actual industry behind the beverages. These are fully blown businesses with P&Ls and breweries and marketing departments and finance departments and HR departments and sales departments, etc. That's number one. Let's market our industry for others. Number two, we need to elevate our recruiting programs. We don't do enough to ensure that we have a breadth and depth and scope of coverage across, different universities, and to highlight in particular to females, you can have a big opportunity in alcohol beverage.
Maggie,
at the same time, Katie, I think we also need to level the playing field to ensure that we're very flexible in how we show up at work and where you can work. You can work from home. You can work from an office. We need to highlight that to all of our future talent.
Give us some numbers here. Give us some data about what you found in the industry and how it compares to other industries, because I think it's fair to say there are many industries when it comes to the corporate world that are dominated by men.
Yeah, when we look at recent studies, the percentage of women in C-suite roles across the marketplace remains relatively small. We all know that. It's circa 21%. When we look at women in C-suite roles in food and beverage, it's a little bit lower at 20%. However, when we look at women in C-suite roles in food and beverage distribution, it's just 10%. And, when you look at general C-suite roles, we know that it's dropped from 24%. So, we talk a lot about gender diversity and females and their careers, but the numbers are showing that we're actually going in the wrong direction. So how do we sustainably bring these numbers up and keep them up and then build off that base? That's our challenge across all industries, and in particular, our focus on AltBev.
And so, Maggie, you mentioned that the numbers are going in the wrong direction. I'm curious what role the pandemic played in that, because obviously it's been a while since myself has been at an in-person conference, just meeting people organically to network. How does that factor in that we've all been virtual for really a year and a half?
Yeah, I think, if I can link that a little bit to mentorship and allyship, when you look at females in the workplace, we need to be more flexible because the female voice is not heard when you're not in the room. And I think being virtual has not helped females in terms of their progression or even staying in the workforce. So how do we move away from mentorship and move towards allyship so that when you're not in the room, somebody is speaking and your voice is heard via somebody else on your behalf?
Hey, Maggie.
And at Heineken USA, I just want to say that we've done it. We over 10 years ago, we launched the Women's Leadership Forum. We have 48% females at Heineken USA. And globally for Heineken, we're looking to increase to 30% females in leadership positions, senior leadership positions by 2030. We have made that commitment.
Well, it's interesting because I look at your website in preparation for this interview, and something sticks out to me. Brands that are about substance rather than status, social rather than exclusive, personalized rather than mass. That's what you consider your portfolio of, quote, upscale international brands. I'm wondering how this report dovetails with the identity that you want consumers to have when they pick up a Heineken, or when they pick up a Dos Equis, or an Arizona Sunrise Hard Seltzer, or one of your emerging brands.
And we are a family-owned company, Heineken globally. And I'm not sure if you know this, Tim, but we are majority-owned by the Heineken family. Yeah. And Charlene Heineken is our owner and our founder. So we put a lot of focus and we put our money where our mouth is when it comes to gender diversity and inclusion and diversity globally at Heineken. So we ensure that our advertising includes diverse consumers because our brands are consumed by diverse consumers. We ensure that our agencies are diverse. We ensure that the communities in which we operate, that we provide a diverse lens to all of the philanthropic efforts that we make.
And so, Maggie, Heineken, matches its words with actions. But again, I keep going back to your point that at an industry-wide level, the numbers are going the wrong way. The gender disparity is getting worse. How does that reverse? What would be the catalyst to actually make the numbers go in the right direction, and how long might that take?
You know what? It really could take a long time, which is why we at Heineken USA, together with other across the industry, other senior females, are launching this campaign to look behind the label. We want to showcase our industry to people, to consumers, to showcase what's behind the beer they're drinking, what's behind the wine they're drinking, what's behind the spirit they're drinking. Because there's a lot of fantastic people who love this beautiful industry, and we're so proud to work for this industry. And many who have left the industry always say, oh God, I really want to go back. So behind the label, our first chapter in our book is to showcase the people behind the industry so that our consumers and society at large can look and say, I admire that industry and I want to work there.
I want to talk a little bit more about the business and get an update on you from the business. Many people may not know that Heineken USA is the parent company of Red Stripe, Strongbow, Tiger, Amstel Light, among many other beers and spirits. I wonder about emerging areas. I wonder about innovation. Where are you really bullish? Where are you seeing growth?
You know, I think, years and years and years ago, it was the bigger brands, lagers, and consumers were happy with that. I think with the advent of social media, and there are really no boundaries between countries anymore. You know, there's no geographic boundaries because people are on their phone, iPad, surfing the net, and they're experiencing brands in different ways. And people can say, well, is that a big challenge? That's really an opportunity that we can take our global brands from around the world and have them show up for our consumers in their locale and how our consumers want them to show up, number one. Number two, we have a huge opportunity to innovate. The lines for consumers are very, very blurred. And what they're looking for in a product, whether it be lower calorie, lower alcohol, or with our own Heineken 0.0, no alcohol, we need to ensure that we are innovating at speed and being extremely agile and nimble to deliver for our consumers what they want. And consumers today, Tim and Katie, are very promiscuous. They're going to try a plethora of different products, and we need to make sure that we are adapting and being fast to market to satisfy those consumer needs.
Hey, just in the last 30 seconds we have with you, Maggie, you piqued my interest when you talked about the no-alcohol beer, the Heineken version of that. What type of growth are you seeing there? Because we have spoken recently to the CEO and founder of Athletic Brewing, who's raised a lot of venture capital money and sees growth just off the charts in about 20 seconds.
Yeah, we are still seeing in year 3 double-digit growth, high double-digit growth.
Wow.
And a lot of new consumers actually coming into the beer category. And it was just fantastic that our brewers took 20 years to develop what I think is the perfect product, Heineken 0.0. Please, if you haven't tried it, go out and try it. It is phenomenal.
Maggie Tymony, Chief Executive Officer at Heineken USA, joining us on the phone from Connecticut. Thank you so much for taking the time and joining us on Bloomberg Business Week Radio. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. And Katie, some big news in the cybersecurity world this week. The company SecureWorks announcing that Wendy Thomas will be president and CEO. They announced that yesterday, effective as of September 3rd. And in just a few minutes, we're going to be speaking with her all about her new role at SecureWorks. In the meantime, let's get a check of the trading day with Charlie Pellet.
And I thank you very much. First of all, I do want to begin with Boston Beer, ticker SAM. Its shares plunging after hours, down now by about 7%. Boston Beer says it now expects to incur hard seltzer-related inventory write-offs. Also reporting after the closing bell and very closely watched, GameStop. That's the struggling video game retailer championed by Reddit-based investors. It is falling in extended trading after reporting a second quarter loss that was wider than Wall Street projections. Must point out that stock so far for the year, though, is up 955%. Lululemon Athletica boosted its outlook for the year and reported sales that outpaced expectations in its latest quarter, sending shares up in late trading, the yoga-wear maker citing increased store productivity during the period. And it was a losing day for the U.S. stock market today, with the Dow, the S&P, and NASDAQ all extending their declines as investors reassess valuations in light of global economic risks, including the spread of the COVID-19 Delta variant and reductions in central bank stimulus. S&P was down 6, a drop of 0.1%. The Dow down 68, down 0.2. NASDAQ down 87, a drop of 0.6%. 10-year yield 1.33%. Spot gold down 0.3%, 17.89 the ounce, and West Texas Intermediate crude up 1.5%, 69.41 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, Katie, it does seem like each and every week we do hear of some sort of new cyber attack, whether it has to do with pipelines or with meat processing facilities or even ferries, or even here in New York, the MTA and the subway. Well, SecureWorks is a company that focuses on cybersecurity, and Wendy Thomas is the president and CEO as of earlier this week. She joins us now on the phone from Atlanta, Georgia. Wendy, congratulations on the new role. This was announced yesterday, but it was effective on September 3rd. Just give us an idea of how you're feeling right now.
Well, always feeling great about leading an organization that does such amazing work. SecureWorks is all about securing organizations globally. And frankly, it's just a privilege for me to continue to fight the good fight with SecureWorks.
What do you see as the main challenge right now, not just facing SecureWorks, but facing each and every company that operates right now in a world where it seems like each and every day we hear of new ransomware attacks, new cybersecurity threats, and companies essentially being taken to their knees for ransom?
You've absolutely hit on one of the prevailing trends in the security space. And, you know, it's easy to take away from all these headlines that the attackers may be winning the fight. Frankly, we see many threat actors now, frankly, offering ransomware as a service. And so for, $126, you can purchase hacking tools on the dark web. And when the barriers to entry are low and the rewards are high, you see proliferation of this type of crime. In fact, the ransomware payouts in 2020 globally alone were about $20 billion. So that is a top security concern for all of us. The stats show that there's a ransomware attack on a business about every 11 seconds. So these attacks are, as you said, hitting closer and closer to home for all of us as supply chains and food and gas are disrupted. And we see headlines as business leaders and feel a responsibility to protect our organizations going forward.
Wow, every 11 seconds.
Oh, go ahead.
Sorry, continue.
Every 11 seconds.
Wow.
And here's the thing, it's such an opportunistic crime. It can feel when you're attacked that you were targeted, but frankly, they're very rarely targeted at a specific company or even an industry. They're targeted at companies that are an easy target.
Well, let's
right? So
talk
when
about
there's
that.
weaknesses there.
Yeah, the
Sure.
fact that it is opportunistic, that it's not necessarily companies being targeted or singled out. I mean, how should businesses take that information that it is opportunistic? How do you even protect your business against that?
What you want to be is a very expensive and hard target to hit, right? Ransomware is all about a very lucrative criminal enterprise. And so if you set the foundational protections in place in a business, it is not complex, but it is diligent to protect your business with good security hygiene, strong passwords, multi-factor authentication, being very guarded about your IT admin rights. Those are great ways to prevent the easy entry, because companies are really only as strong as their weakest link, right? That adversary only has to find one crack in the armor to get in. And so we believe that you have to do everything you can to be a hard target for them. And at SecureWorks, we also believe that eventually they're going to find a way in. Some employee will probably click on that phishing email. And so you've got to have complete visibility to detect anything and everything across your digital estate. And then because speed is of the essence, you've got to have the ability to contain those threats in an automated way before real damage can be done.
So if it is inevitable that someone will gain access to a company network, what's the next step that the company needs to take to minimize damage?
That's where the ability to be prepared for when they're in. And so the time to detect them has to be absolutely rapid. And then the ability to have a platform like the Tejas platform that SecureWorks has, it tells you what good looks like, right? It says, this has happened, this is who the threat actor is, this is the asset they're targeting, and it's important to your organization. Click this button, it's time to contain this threat immediately. So it's that mean time to remediation that is important, so that threat actor doesn't have the time to get to a place where they can deploy that ransomware and cripple your organization.
And so, Wendy, we have about 30 seconds, but you mentioned that we've really seen a proliferation of attacks over the past few months. I'm curious, why now? Why 2021 have we seen just such a big uptick in hacks?
I think there's a combination of an increase in hacks, and certainly the shift to remote work increased the attack surface in the midst of the pandemic. And there were opportunities for those threat actors to also use the fear or lack of information around the pandemic to create different kinds of attack vectors, phishing emails around vaccine answers and that kind of thing. But I also think that the impact of those has been much larger, impacting everyday citizens, like the pipeline attack. And because of that, the headlines and the focus of even government has increased as a result of that.
Wendy Thomas, stand by, because we're going to take a quick break, do some news, and then we're going to come right back to you for more. That's Wendy Thomas, President and CEO of SecureWorks. She joins us on the phone from Atlanta, Georgia. Let's go now to Washington, D.C., where Nancy Lyons is standing by for a check of world and national news. Hey, Nance.
Hey, Tim. A crisis over raising the federal debt ceiling is looming. Treasury Secretary Janet Yellen is urging lawmakers to increase the federal debt limit, warning congressional leaders today that cash and extraordinary measures will probably run out sometime next month. House Speaker Nancy Pelosi says much of what's needed is to cover costs incurred under the previous administration.
The Trump administration, which amassed over $7 trillion in debt, and that's what this debt ceiling lift is paying for.
Pelosi says raising the debt limit does not involve new spending. Some Republicans are threatening to oppose it without spending cuts. Virginia has removed the nation's largest lasting symbol of the Confederacy. A bronze statue of Confederate General Robert E. Lee was removed from a pedestal today in Richmond after a year-long court fight. The city's black residents view it as a victory.
We no longer have to drive up and down Monument Avenue and be reminded of what he stood for and white supremacy and Richmond being the capital of the Confederacy.
The 12-ton statue is being taken apart and moved to a secure location. Macy's is bringing back its Thanksgiving Day parade after going virtual during the pandemic. This is the 95th year of the annual holiday celebration. Officials say in order to resume the in-person event, health and safety practices will be in place. The Supreme Court is going back to in-person arguments. The justices plan to return to their marble courtroom for arguments beginning in October, nearly 19 months after the in-person sessions were halted. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Well, some news crossing the Bloomberg a little bit earlier in the hour that we wanted to get to, all about New York City banning the sale of gasoline-powered cars starting in 2035. The sale of new gas-powered cars and trucks will be banned in New York State in 14 years. That's under legislation signed by Governor Kathy Hochul on Wednesday, Katie.
Yeah, 14 years. Honestly, I was working my way through this headline. I thought I was going to say 2025. There's plenty of time to prepare. And according to the bill, all new medium and heavy duty vehicles sold will have until 2045 to meet the goal. So we are talking about a very long time frame here, Tim.
A very long time frame. And I think the important thing to keep in mind here is just because a state is banning the sale of gasoline-powered cars at a certain time doesn't mean that those cars are going to disappear from the road. I mean, go look at any highway and see the variety of cars that you have driving on them in terms of model year. So if the goal is to ultimately get gas-powered cars off the road, with goals like this, even though they seem ambitious at first blush, there's still many years to go following a ban like this.
Exactly. Yeah. Cars last for a while, thankfully, or they're supposed to. But it is interesting. It's just another sign that there is this big push behind EVs. And you do have companies, too, taking up the mantle. You have companies such as General Motors and Volkswagen saying that they will begin manufacturing zero-emission vehicles exclusively. So, lengthy timelines by the states, but you also have corporations also backing this push.
It's important to give guidance to these companies because there are many different states in many different countries that these companies produce cars for. So New York does join California, which last year became the first state to set an expiration date of 2035 for the traditional automobile. Massachusetts is aiming for a similar goal, but I think in the absence of a federal rule on this, Katie, there is going to be some confusion for car companies, and perhaps we may see car companies have more ambitious timelines than some states have laid out as a result.
Absolutely. It'll definitely be one to watch.
Yeah, it certainly will. We'll bring you the latest as we continue to get it. Again, this law signed into law today by Governor Kathy Hochul. This is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on GameStop shares after earnings. The stock now is down 2.7%. Lululemon after the bell, pushing higher after earnings, up now by 12.3%. Down day on Wall Street, NASDAQ 100 notching its biggest drop in 2 weeks. S&P 500 down for a third day today. S&P tumbling 6 points, ending the session at 45.14, down by 0.1%. Equities retreated as investors reassessed valuations in light of global economic risks. The Dow down 68, down 0.2%. NASDAQ down 87, a drop of 0.6%. 10-year yield 1.33%. 10-year up 11.30 seconds. Spot gold down 0.2%. 17.89 the ounce. And West Texas Intermediate crude up 1.5%. 69.38 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's get right back to Wendy Thomas, President and CEO of SecureWorks. She joins us on the phone from Atlanta, Georgia. Wendy, whenever I'm talking to a cybersecurity expert, someone in a position like yours, I want to ask, yes, about what companies can do, but also about what we can do as individuals. I mean, we carry around these phones with so much information on them. We have our email accounts that, allow us to reset passwords if we forgot a password. What is the best way that we can think about protecting our own personal data when it's out in so many places? What are some best practices for us?
Well, first of all, I say that security is a team sport, right? And so one of the things that's important to SecureWorks is increasing cyber literacy generally, because if you make yourself, again, a difficult target, then the likelihood that you'll be opportunistically targeted is lower. But your information does have value, your contacts, your banking information, and to the extent that you don't put multi-factor authentication in place around your particularly banking or other sensitive information or application access, you're creating unnecessary exposure. Strong passwords, not your dog's name, not anything around your family. So there's just the same kind of hardening of compromise and access that companies need to do. There's the same thing that individuals need to do. And frankly, just be aware of where you're putting your information, especially on a public computer in a library or such. And that kind of awareness and vigilance will help keep you safe.
Okay, well, I definitely need to go update a few passwords, but I do want to get a check on the SecureWorks business because you took over effective as of September 3rd. SecureWorks reported earnings on September 2nd, and they were a little bit below analyst expectations, both second quarter revenue and the forecasts going forward for the third quarter and the 2022 fiscal year revenue below what analysts had been expecting. And the stock is still up about 28% for 2021, but definitely a rough week yesterday, plunging about 14% for the week. So Wendy, I know you just took over, you're still getting the seat warm, but I'm curious, what's your priority going forward? How do you right the ship?
So we actually have the right answer for today's toughest security challenges. And inside of the SecureWorks business, which was founded about 20 years ago, we first started this fight with really a services-based approach to security. And as we've talked about, because of the technology evolution of the tools in threat actors' hands and the pace of this fight and the need for automated, rapid, machine learning fueled detections and orchestrated remediation to prevent the kind of massive breaches and costs that we see in modern times. About 4 years ago, we started to build a modern security platform called Taegis that is all about taking that full detection and response automation capability and putting it all together in a way that can solve the real security challenges of today. That business inside of SecureWorks' total services business is actually growing incredibly fast. 200% in second quarter over last year, hit 100 million ARR just 2 years after we launched the solution. And so while we are shifting away from some of the services that we previously offered as part of the total revenue, the right answer and the true value for customers in the security space is this emerging XDR platform, and that's a ship we're going to keep sailing.
I'm wondering about breakdown of revenues in fiscal year 2021, where we are now. 76% of revenue comes from managed security and threat intelligence. 24% comes from security and risk consulting solutions. How do you want to see that mix change?
We would like to see our XDR solutions, our Tejas solutions, be about 90% of our total revenue, and we shared that as a long-term model.
When you say long-term, how many years are you thinking here?
Well, we don't have an exact number out there. That's a few years out, and I think the importance of continuing to provide some degree of consulting services to help customers really mature their security program is an important overall part of the business model to keep them secure.
And so, Wendy, you made the point earlier that the attacks that we've seen, they haven't been targeted. They've been more opportunistic in nature versus companies being singled out. But I'm curious, have you noticed any industry or any type of company being particularly vulnerable to ransomware attacks?
We absolutely have seen certain industries that are more vulnerable. If you think about where the security adoption started many years ago, financial services companies were a lucrative target, and they had a lot of compliance requirements. They became security hardened very quickly, and you don't often see them in the headlines today. What you see, again, are those, unfortunately, easier targets. So you see now, unfortunately, educational institutions, universities, even K through 12 school systems under attack, or manufacturing companies who have had to go through very rapid digital transformation, and so their exposure of their attack surface has increased. We unfortunately see that those organizations, if they have not partnered with someone like SecureWorks to help put that security in place, they are quite vulnerable and often successfully attacked.
Wendy, this is a crowded space. There are a lot of companies working on trying to secure networks and protect companies and businesses and get their business. I'm wondering how you compete with the other bigger players and how your sales force competes with that.
Sure. The answer for us is having the right answer from having been in the security space for quite some time. And that means that it's not just an individual product to protect part of your network. It is all about being able to go in and tell a customer we have that full coverage of their entire digital estate. There's no piece of visibility that they would be missing, and no piece of response capabilities that they would be lacking. And so it's just a matter of getting out credibly to the space to talk about the return on investment relative to this type of security investment, instead of having to cobble together lots of individual security point products, which lets the adversary weave in between those products. I sort of liken buying those products to buying a treadmill and expecting that you're going to lose weight. That's not what works. SecureWorks takes a very holistic approach to create security outcomes for customers and not just put certain security tools in place.
Wendy Thomas, President and CEO of SecureWorks, joining us on the phone from Atlanta, Georgia. Wendy, thank you so much for taking the time. Wendy, of course, was named CEO on Tuesday, and she spoke to us all about the cybersecurity industry and the future of SecureWorks. Well, in just a few minutes, Sound On with Joe Matthew is going to be starting, and Joe joins us now from Washington, D.C. Joe, hey, what can we expect on the show this afternoon?
Well, we're going to start getting into the debt ceiling debate that's occupied so much time with an important guest coming up a little bit later on in the hour, and that's another member of the Ways and Means Committee. Tim, we spoke with the ranking member yesterday, and we'll have the view from a little bit different perspective in Congressman David Schweikert, Republican from Arizona, next on Sound On.
We look forward to that. That's Sound On with Joe Matthew today at 5 p.m. Wall Street time on Bloomberg Radio. Well, that's going to do it for Bloomberg Business Week with Katie Greifeld and Tim Stenovec. We'll see you tomorrow, 2 p.m. Wall Street time. This is Bloomberg Radio, and this is Bloomberg.